All right, welcome back to the channel, Crypto Trend Trader, with our Sunday evening market update. Before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, just one moment. Going to finish getting everything set up here. Looking good so far, and we will get rolling. We have quite a bit to look at today. There's a ton of excitement going into like more earnings this week. Obviously going into the second quarter, and quite a bit of activity going on here. I always talk about how quarters are pivotal points in the market, and often we will see trend changes. So I'm sure everyone is curious, are we going to see that trend change? Reversal, or are we going to see like further continuation of the parabolic uptrends that we're seeing across all markets? So give me just one moment. Get everything rolling here. Make sure we're coming through loud and clear. All right, great. Everything looks good. Today we're actually going to start with a little bit of a broader picture of what's going on here. So I want to start off, like always, with the 10-year Treasury yield, and then also the dollar index, TNX and DXY, and then we'll get into all of our indexes, cryptocurrency assets, and then we'll take a look specifically at the tech sector and also commodity sector as well, specific assets, and then just talking about the broad picture as a whole. So this is the 10-year Treasury. I'm not hearing people talk specifically about important things that are showing up on these charts here. I've been talking about the 10-year Treasury and the DXY for months. I've been talking about semiconductors for a little over a year now, basically like November, December of 2019. I was talking about the importance of them and why they were basically showing that there was going to be a market crash, and how I was determining that. So if you're in the chat also, if you don't mind, just let me know. Everything's coming through loud and clear, and you can see everything perfectly. But I was talking about all these things way before everyone, and why they were clear indicators. Basically what was happening with semiconductors and the repo market was basically the catalyst for why I predicted the big crash before it happened, not only in stock market, but also Bitcoin as well. I basically called it out at the end of the year, 2019, and then in January, February of 2020, I specifically said my targets, what I was expecting to happen and everything, which still lined up with my same targets as before, but essentially I was warning everyone there's about to be a massive pullback. And then of course, there was a massive crash. We blamed it on, the cerveza sickness or whatever, but the truth is, it was already going to happen. The charts had said that it was going to happen. The repo market had said that it was going to happen. There was very clearly a liquidity crisis, and looking at semiconductors, production and sales and whatnot, it was very clear there was going to be an issue. And I'm seeing a lot of the same issues right now starting to show up. So I want to go ahead and go through a couple things, and we'll talk about like the macro and why I'm seeing that same thing again. So here we're on the weekly, and I'm looking at the 10-year Treasury, and as you can see, obviously this thing topped out basically. The previous like cycle high was back in October of 2018, and from that point we were in this very strong downward. It is a descending broadening wedge basically, because we're constantly going down, and then the pattern is getting bigger and bigger at the bottom. So we're getting more and more volatility as we continue down. And then I had specifically talked about how I thought we were bottoming out at like this 0.5 range back here, and then when we came back down and put in that double bottom, it was very clear. Now since that happened, a couple very important things have happened that no one is talking about. We had a fake out back here where we attempted to cross back to the upside, and it failed and got rejected, and we sold back off, and then we put in massive divergence, which is part of why I was specifically calling for this bottom to be in. Not just because I felt like it was in, not just because we were damn near at zero, but because of actual technicals on the chart. So if you notice right here, we are getting essentially the same situation where we came back up, but instead of getting denied, getting rejected here at the 821 cross on the weekly, we got the cross. And since we got that cross, we already had, let's look at our indicator oscillators that I always use to determine trend. Number one, the 821 cross. Okay, that's obviously very bullish. We are, however, below the 200 exponential and simple moving average. So and they are sloped to the downside. So at this point in time, we were still very clearly in a downtrend on this asset, but I'm talking about picking the actual bottom or potential trend change, as opposed to just buying into like the safety trade once we're in a bull market for like the long trending trade. So essentially the 821 cross is a very clear indication for me. Also, a hard sell signal at the bottom of a range in the bullish control zone is a divergence signal for me. Also, the divergence that took place, between basically this point here and this point here, this is bullish divergence. The indicator oscillator came down lower right here than it did right here. So you'll see where the actual blue peaks right here and where the blue peaks right here. It's basically like the exact same spot on both of these things, but the price comes much, much lower. So that is one form of bullish divergence, telling you that essentially this is an unsustainable move. For a price to move this much further down with the exact same amount of strength as it took to move this far down, that is not sustainable. It's literally impossible, because eventually you run out of sellers. So that's the idea behind bullish divergences. You will then get a reflex move back up, which we did. We got this massive move back up, a rejection, but then when we came back over here, we put in a higher low, which is potentially the beginning of an uptrend. So we had the 821 cross. We have the hard sell signal at the bottom of a range in the bearish control zone. We have the cross of the Stochs back to the upside. And then, of course, we have multiple green histograms in a row, crosses over the slope line, flips the slope line back over blue. So now we have essentially at this point in time right here, this indicator is completely bullish because we've crossed over, we flipped it blue, and we're getting multiple green histograms in a row. Right here, this one is completely bullish, and we got the divergence signal at the bottom here, which is again very bullish. And then here we got the 821 cross. So at about 0.75% is when I got extremely bullish on this thing on the weekly. Okay. And obviously, before that happens on the weekly, it has to happen on the daily. Before it happens on the monthly, it has to happen on the weekly. So very clearly now, what has happened is we have entered into a very strong uptrend. From that point, we went from 0.73 to 1.67. So we went up over 1% in just a couple months. That's like typically unheard of, with the exception of like this huge dump right here during like literally like a financial crisis, like world meltdown event. Okay. So now we have our 8, our 21, our 55 exponential, and our 50 all angled to the upside in correct order. We have the 89 is angled to the upside, but still has not been passed by all these other moving averages. And then here we have flat 200 exponential and a nearly flat 200 simple. And then obviously 377 and 528 take forever to react. So we wouldn't expect them to change over anytime soon until we get sustained price action above, these moving averages, which may not happen, but we'll have to see when that comes to it. But what I'm looking at now is we have gotten up to the 200 exponential moving average. We broke above it. We got rejected. We came back to it. We got rejected. We came back to it. And now here we close directly under it again. When you hit a key moving average like this, what you would expect for a rejection and then continuation is typically going to be like a powerful rejection in the opposite direction almost immediately. It's people hard selling into that or moving against that as resistance, the same way that a buy off of that would obviously be like clear support. So what I'm seeing here is we're not getting a hard rejection. Is it possible we still get a rejection and sell off? Yes, but look right here on the parabolic SAR. All these green dots in a row. Once again, another very strong indication of trend. So until we come down here and potentially take that out at like 1.5 or something like that, I'm not even going to start becoming potentially bearish on this. At this point in time, I do expect to move back up to 2.0, 2%, which is exactly where the 200 simple moving average and the 377 are coming into place. And it looks very likely at this point in time that obviously that's where we're headed. Now, also, we're very clearly in the bullish control zone. I want to switch over now to the monthly. Obviously, the daily tells you what's going to happen on the monthly before it happens, weekly before it happens, the weekly tells you what's going to happen on the monthly before it happens, etc., etc. So now what I'm looking at is, once again, we have the 8 is directly below the 21. We're in now like a parabolic uptrend. We have gotten, look right here, we got one very clear bearish control zone, hard buy signal, and then a very big move back up to the upside where we got rejected by the 89 moving average right here. We got that signal right here. And now here we are once again on the monthly. We got clear bearish control zone, hard buy signal, exit the control zone, bunch of green histograms in a row, bunch of green histograms in a row. It's the same exact chart pattern. Same thing is happening that happened back here before we got that massive move, which eventually got rejected by the 89. And that was back in 2014. Okay, so the last time we got the same signal was in 2014, at which point in time we basically came down again months later, came back up, but essentially overall still in a downtrend. So it doesn't have to change the overall macro trend, but what it is showing us very clearly is that, we're potentially getting ready to cross this monthly to the upside, at which point in time, from when the monthly crossed to the upside right here, to the 89 moving average or whatever, we still had multiple months. We still had 1, 2, 3, 4, 5, 6, 7 months of higher highs from that cross. Is it possible it just gets rejected? Of course it is. Anything's possible. But is it likely? I don't think so, because we're getting so many signals in the direction of this. So essentially now we have the hard buy signal coming out of the bearish control zone. We have the 821 about to cross right here, and we have a bunch of green histograms in a row. We're about to flip the slope line back over and have the histogram above it, at which point in time this will flip over blue and we'll be in a long trending trade to the upside that's likely, based on previous experience on the monthly chart for the 10-year treasury, to last another like 7 or so months. Maybe we get rejected right here at the 200 simple moving average and the 89. Where's that at? 2.0. So once again, something else lining up telling us that 2% interest rates on the 10-year are very likely, at which point in time we could potentially get rejected. We could potentially get rejected right here, maybe even come back down and retest the 1.35%. But again, I don't think it's likely right now. I think it's more likely than not we're going to continue in this very powerful uptrend on the monthly. So that's our monthly chart. Obviously, everything is doing exactly what we've been looking at. We are still broken out of our channel. Matter of fact, I'm going to just do a quick little refresher right here. Very, very clearly, we were in a massive, massive downtrend. We broke out of that downtrend and started off into this channel uptrend right here, from the top right here back in 2018 to the bottom right here in 2020 March. We basically have retraced of this bearish move to the downside. We have retraced over 62%, 61.8% already. I'm expecting now that we've busted above the 61.8% and sustained here. The more likely target will be our next Fibonacci key level, which is the 786. So once again, when we look at the 786, where's that at? 2%, slightly above 2%. So we broke out of this ascending channel trend line right here, got our measure move break right here, consolidated above the 618. So that is still very clearly our target, and everything is right on track to head there. So, and then obviously the inverse correlation between this and like asset or stock prices tells us that as interest rates rise, money becomes more expensive. So more likely than not, what that's going to mean is a pullback or lack of new liquidity, lack of new buying power coming into like these assets such as stock markets, cryptocurrencies, real estate, etc. As you have to pay more for money, as the interest rates rise to borrow money, you're less likely to borrow that money. So that is essentially what's happening with the 10-year. It's costing more money to borrow, so therefore you have to have a higher yield guaranteed, or else it's not guaranteed money in the same way. When interest rates are at 0 and you can make 5% on something, you make 5% net, and that's great. When interest rates are at 5%, if your average yield is still 5%, it's a wash basically. So that's why the difference between not just the actual percentage of interest rates is important, but also the interest rates compared to like your average yield. So as this approaches or matches at 1.67%, like the return that you would get on, say, an S&P 500 index with your dividends, which is essentially like 1.5%, people are less likely to be investing in a speculative thing like a stock market dividend, stock market index like the S&P that pays 1.5% dividend, when they can just invest in a treasury, which is basically, instead of betting on the market, instead of betting on the stock market, you're betting on the government. So which one is more likely to fail? Well, they could both fail, but if they're going to fail, first the stock market would fail and start to capitulate, and then the government would fail and start to capitulate. You're not going to have the government fail and the stock market stay strong, because essentially the stock market is an index of companies inside of a country, which is overall reflective of the condition of the government. So again, it's the safe bet. That's all it is. It's like de-risking. If you get the same percent to bet on something that's risky, or you get the same percent to bet on something that's less risky, a smart person is obviously going to take the less risky investment for the same overall yield. So that's what I'm seeing here in the 10-year and why it's so important. Now I want to just jump back over now, and I want to take a look at the dollar. We looked at basically the long-term trend of the 10-year, and now I want to look at the long-term trend of the dollar. So now what's happening on the dollar? We basically entered into a downtrend based on the 821 cross to the downside back here in June of 2020. Okay, so once that happened, we were very clearly in a downtrend and we're not able to get back above the 21 exponential moving average. Here, when we bottomed out at the bottom, once again, what happened here? We put in very clear divergence, bullish divergence. We put in a clearly low low on the indicator, then we put in a clearly higher low on the indicator. So from this peak to this peak, it's very low and then it's less low. From this peak to this peak, it is low and then it's much lower. So this is clearly bullish divergence on this indicator oscillator in comparison to price action, which once again is unsustainable. It's very unsustainable that it would use less energy to get a more powerful move to the downside. They should typically line up like similarly. Now here, once again, we got basically a low right here and then a slightly higher low, or even close enough to call it the same low, which once again, low right here and a very much lower low right here. Again, bullish divergence. So then at that point in time, what are we looking for? We're looking for a similar situation to what happened right here. A clear bearish control zone, leaving the bearish control zone and getting the hard buy signal. But once again, we did not get our bullish divergence right here, and we were unable to get the 821 cross back to the upside. So this to me looks like basically a failed breakout, or a failed rally. Here we get the opposite. We get the hard sell signal near the bottom of a trend, which is typically a divergence indicator. We have clear bullish divergence price action on the weekly between our indicator oscillator and our actual chart right here. And then once again, we get the follow through. We get the hard buy signal cross to the upside. We get the 821 cross to the upside right here. We get our histogram, multiple greens in a row, and a cross of the slope line right here. All things that we failed to get right here with this false signal. Get the solid cross right here, and now the next thing that's going to happen is, as long as this histogram is above the red line for long enough, eventually it's going to flip the slope line over blue right here, like it did back on our previous run. And then of course, obviously, we will have everything telling us that we're in a bullish uptrend on this asset. So now we're on the weekly, and we now have the cross of the 821 on the weekly. So now once again, this does not necessarily mean that we have to have all of a sudden all these other assets selling off. What it means is the dollar is strengthening in comparison to the basket of currencies that it is compared to inside of the DXY, which is primarily, it's over 50%, close to 60%, the euro. So all it's saying is that the dollar is strengthening compared to the euro. This could be because of better policy or implementation of, the vaccinations. This could be because of overall, faster recovery in markets or production, or new money being spent on infrastructure. It could be because of confidence in the dollar, because of speculation. It could be because of a million different factors. You can argue one or the other, but the fact of the matter is, technically, the dollar is strengthening and has entered into a weekly long-term uptrend right here. So what's our next target? Once we get that 821 cross to the upside, we've already hit the 50-55 right here. Well, nearly the 50, but we hit the 55, got a slight rejection, came back down, found support on the 528 moving average in white right here, found support on the 8 and 21 right here, and now we have closed slightly above them. So what I would expect now is continuation to the upside. We have entered into very clearly the bullish control zone here, the red highlighted portion in the back. We have not been inside of the bullish control zone since back here in December of 2018. So it's literally been, 2.5 years, almost 2.25 years since we've been inside the bullish control zone. So what's the likelihood now? Let's look at a similar signature on our chart and see what it tells us. We had a very clear area where we entered the bearish control zone. We had a fake out hard buy signal. We had a rejection of the 821 cross, at which point in time we sold back off. Okay. On the way down, we sold off. We got a hard sell signal on the way down. We then entered into, once again, a bearish control zone. We got a hard buy signal. We got the 821 cross to the upside, and then we entered into the bullish control zone, and we flipped the slope line over blue. This is on a weekly time frame. From that point in time, we then entered into a trend right here that lasted from, let's just go from the bottom, but obviously we're not going to go from the bottom normally, but we're just going to go from the bottom to the top. That is 110 bars. Or 770 days. 770 days. Okay. So we entered into over 2 years of bullish movement inside of a macro bearish downtrend. We're in a very, very bearish downtrend. We got to pop up here. We get a sell back off, and then we get 2 years of positive price action to the upside. So we have that same signature showing up right now. All the same signatures all through this area. We got everything showing up exactly the same. The hard buy signal up to here, and now we're right about this portion we haven't gotten up to the 200 exponential and simple moving averages, but we're basically very close to those areas right now. What's up, brother? Welcome. So now here we are, and what can we expect from here? Probably like 2 more years of uptrend. I mean, if we're going to go by actual facts and math and charts and technicals, not just like, oh, the dollar's going to zero because everything and the printing and it's a race to the bottom. Let's use actual technicals, okay? So based on actual technicals, what's likely to happen right now is from that cross right here to our next peak, we're probably going to get about 2 years of positive price action to the upside, in which point the dollar will obviously oscillate, bounce around like a heartbeat, but it will be in an overall uptrend inside of an overall macro downtrend. So that's what I'm paying attention to. So here we're basically right around this area right now. So at that point in time, we were at 92, and when we topped out, we were at 102. So that was another like 10 move up right here. So we're at 92 right now once again. So potentially, we come back up and put in a slightly higher lower high. So we had a high right here. We had a slightly lower high right here. So we could very likely come back up and get to like 100 this time instead of 102 and then top out there and go down. But it could last for like 2 years. So right now I am in a strengthening dollar position. I have a higher amount of dollars right now ready to be deployed in the anticipation of assets, investments, speculative, whatever you want to call it, getting cheaper. So although I do macro, very long term, believe that, of course, every currency is going to depreciate in value in relation to actual assets. Once again, now the important thing to do is see that there's potential now for a 1 to 2 year minimum like trend back to the upside in this. So that would correspond obviously with other currencies inside the basket weakening, and more often than not, if the dollar is strengthening, other people will see this taking place and start to remove their liquidity, their dollars, their profits, whatever, from these investments that they're in into dollars, seeing that it's strengthening, and then anticipating once again that they can do the same thing as I'm doing, potentially deploy that capital better later in the future after a pullback inside of an overall macro trend, which may be reversed. That's fine. It might be in a downtrend, but we're going to enter into a micro uptrend inside that downtrend that's probably going to last like 2 years. So that's what I'm looking at right now. We are very close to obviously having the same signature play out. Once again, you will notice right here, bullish divergence took place on the weekly between these 2 points. And right here, very clearly, same exact thing that's happening right now. So in my opinion, this price action right here and what happened right there looks very similar to what is about to happen right here. Now, the argument is from most people that we put in a high right here and we put in a lower high. Therefore, we're going down. We're going down, down, down. Everything's going down. Dollar's going to zero. We put in a low right here. And then here we put in a higher low, and we're getting all the same signals. So everyone else is very, very bearish on this and says we're going to go down. We're going to go down fast. But what I think is going to happen is we're going to see what happens, because typically, of course, we're in a downtrend. We're in a downtrend. We have a high back here. We have clearly lower high right here. But what's happening right now? We bottomed out way back here. Since then, we've been in a very clear uptrend. Okay, we have a low right here. 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 All these lows are higher and higher up. Okay, then we have a high right here. But if you look at this high, this is actually a micro high, but it's part of this same move, because that was our high, a low right here. That was our high. And then this is our high or low. So this actually gets ignored because it's just part of this correction to a higher low. Okay, so then when we moved up here, we put in once again a high, and then we put in a low, and then we put in a lower high. But is this the same lower high that we put in right back here, where it's still part of the same correction, but then we put in a lower low? Or is this the top right here, and then we come down and put in a higher low, and then we're actually developing a flag pattern where we have a high, a lower high, we have a low, then a higher low. So now this overall, a flag inside of a bullish uptrend, is typically a bullish pattern. It breaks out to the upside about 66% of the time, breaks out to the downside about 33% of the time. So we have a bunch of things telling us that we are now about to get a pushback to the upside. Does that mean that we are 100% going to break out and take out this high right here? No. But what it tells me is there are more bullish things, and probability tells me right now that the dollar is more likely to appreciate from this point than it is to depreciate from this point in relation to the basket of currencies that the DXY compares it to. So that's our weekly chart on the DXY, and my argument why dollars are important right now. Now, once again, if you look at the daily, which often will tell us what's going to happen on the weekly, obviously we topped out at the 200 exponential and simple moving averages. We came down below them slightly, but we are just consolidating at those 200 moving averages, at those blue moving averages. Could we get the 821 cross down here and enter into a consolidation pullback pattern? For sure. Were we expecting strong resistance right here in this area? 100%. We have both 200 moving averages right here, and then we have the 377 and the 528. All very strong resistances when we're below them. We have also this huge cluster of previous support at the bottom here and previous resistance at the top right here. So we basically have this massive zone of resistance that we're trying to flip over into support. So if we lose the area that we're at right now, could we potentially sell back off and this weakens? Of course it could, 100%. But is the likelihood more likely, based on all of these different things that we've talked about, going to just consolidate in this area, reset our indicator oscillators, which were very clearly getting exhausted to the upside, and then get that follow through continuation up to like 93 or 95, which have been our long-term targets for, months now, basically? 100%. And once again, we are still inside of, I'm going to turn off the moving averages real quick, and then we're going to get into some actual assets very shortly. We are still very clearly inside of a descending channel that we broke out of, and then we entered into an ascending broadening wedge. We came all the way to the top of the wedge on multiple occasions and established a very clear resistance line here in red. We have multiple touches on the bottom for a support in blue, and then right through the middle right here we have this dotted white line, which is our heart line support, which has very clearly gotten interaction both to the up and to the downside, which we're essentially bouncing right now. So we're at a key Fibonacci level. We're at all these key different levels. We would expect this price action to chop around here, possibly even sell back off to the bottom of the ascending broadening wedge, followed by a move back to the upside. Eventually, if we break through this channel, just like this is our measured move of the descending channel right here, we would expect to get our measured move of, we would expect to get the measure move of the meat of the pattern, this ascending broadening wedge right here, breakout, which is obviously going to take us up to our potential area to retest, essentially like the 0.5 Fibonacci level, which goes from this top right here to the bottom right here. That would be a 50% retrace of the overall bearish move, at which point in time we could definitely see continuation to the downside, or we would address it based on like our next Fibonacci level, the 0.618 up at like 97, or even the 786 up at 99, at which point in time, once again, we could potentially top out in this area and just put in another lower high and operate inside of that flag, which would neither, it would just be us inside of that same pattern, not breaking out, which the most likely thing to always happen is we're more likely to stay inside of a pattern that's lasted for a while than we are to break out. Because when we do break out, we're only going to break out one time. It's just like picking the top or the bottom of a market. It's very hard to do because if you're in a 2-year bull market or a 2-year bear market, there's only one top. So if it tops out or bottoms out one day inside that bull market or bear market, the likelihood of you picking that one day is 1 in 200. There's 200 days. It tops out or bottoms out one time inside of that 200 days. Therefore, you have a less than 1% chance. You have a 0.5% chance of picking the absolute top or the absolute bottom. That is why it's extremely hard to pick tops and bottoms. Probability of you picking that is very, very low. Okay, so if we look at something else that has a probability of 66% versus trying to pick a top or a bottom that has a probability of playing out of less than 1% or 0.5%, that's obviously, which one do you want to bet on? I would much rather bet on 66% chance of something happening than, picking the top or the bottom, of 0.5% chance or 1% chance. So, and that's just my opinion, of course. You can do whatever you want. It's not financial advice. I'm not your financial advisor, but telling you the mentality behind all this stuff. So that is our dollar. That is our 10-year treasury. And, obviously very clearly tell you my views on both those things. I don't need to keep reiterating that. Now, I want to stick to gold and silver right now. I want to talk about them. So let's look at gold first. And then we'll get into some, I'm actually going to jump back over, I think, to crypto after this, just because we are seeing quite a bit of volatility. I'm seeing us operating inside of a 4-hour descending triangle right now. And, very likely at least topping out right now on the micro, if not potentially the macro. But, we could obviously still have potential to the upside. I'm not saying the trend is over, but on the 4-hour right now, I'm seeing a very, very clear descending triangle, and that was very clearly a stop hunt or stop squeeze that took place that rocketed us up to 60,200. we also have a massive gap left behind on futures. So we'll get to that very shortly. But I do want to talk about gold and silver on the macro while we're looking at the weekly. So very clearly what happened with gold. You know, we obviously got above the 200 exponential and simple moving averages, came up here, failed to cross to the downside, failed to cross to the downside, and then here we finally got the cross to the downside. So from, and again, I'm on the weekly, from when we got that cross to the downside at the moving average, the 8 and 21 exponential moving averages, which is, you know, obviously what I use very clearly to determine the micro trend, whether or not we're above the 200 exponential or simply moving average is very important too. But, you know, we essentially had like an 8 to 10% move to the downside from when we got the cross right there. From that point in time, we have been just consolidating. This is a weekly downtrend on gold after a weekly uptrend in gold that lasted far, far longer. So am I saying that we have to just capitulate here and that's it and gold's going to die? No, not at all. But what I'm saying is from way back here at 1863, I was telling everyone we're entering into a long-term downtrend or consolidation pattern. At which point in time, put in a series of lower highs and a series of lower lows, which are very clearly evident based on our channel to the downside, obviously, you know, which more than likely we're going to continue operating inside of that channel until the one time that we break out of it. We're going to continue that same pattern taking place until we break it. And when we do break it, we're going to break it one time. And then we can enter back into an uptrend or, you know, basically broke out of that pattern and get a capitulation event to the downside. I think it's more likely that we would go to the upside if we're going to break that pattern, but there's very high likelihood we'll just continue inside that pattern, you know, in this essentially retracement period. So what I'm looking at right here is we've been unable from this point in time, we lost our moving average, got the cross right here, got above it, but could not cross it back to the upside. And then since that point in time, we've been unable to get back above the 8-week moving average. Okay. And here we are getting rejected at it again. So more than likely, what do I see happening? I see more than likely us selling back off here and putting in another lower low, another lower low. We put in our low down here on closes of weekly at 1697. Everybody was saying it was impossible. We would never get down to 1600. We would never, ever. Gold was bullish. We got down to 1678, our exact target on the daily, at which point in time it hit the bottom of the channel and we expected to move back up potentially to the heart line or top of the channel. Everything's played out perfectly. We've nailed these markets completely from way back here at the $2,000 top. So what do I expect to happen? This is going to roll back over. It very likely looks like to me, until the market tells me something different, that it's going to roll back over. And if it does roll back over, the next key target is going to be a very clear resistance, which turns support at like roughly this level right here, which corresponds with the 200 exponential moving average. So there's a very high likelihood, based on what the actual technicals are telling us right now, not some fundamentals that there's some shortage and everybody wants your gold and we need gold and everything's going to crash and you need to have gold so you can barter with things because the world's going to end. I'm talking about actual technicals. The technicals right now are pointing to the downside to the 200 exponential moving average. So that is 1550 on the weekly. So that's what gold looks like. Now remember, from when we got that 821 cross here on the weekly, what happened? We got over a 10% sell-off. Potential next target, we hit the 89. Potential next target is the 200 exponential moving average. So now let's switch over from gold, and I want to take a look at silver. So we looked at gold. We talked about how we knew what was happening. Now, before we do that, we do have an 821 cross to the upside on gold right here on the daily. So we have potential now that we're going to reverse this trend. But we are still very clearly inside of, man, there's so much going on right now. It's tough to tell what's going on. But if you look at just this channel right here, I literally told you exactly what's going to happen. We're going to bottom out right here. We're going to retest the bottom right here. We broke down from this very clear trend line that gold was operating inside of from when it bottomed. We got bullish back here at $1,350 when we broke through right here. There's a very high likelihood that we're going to test one of these three key Fibonacci levels and potentially even come down to our previous breakout. So now where's the 200 exponential moving average? Simple moving average, roughly 1600, and down here at 1460. So where is this channel taking us to? I'm going to just extend this out a little further. We bottomed, touched the bottom of the channel, tried to break out the top, failed, bottom of the channel, tried to break out. We could potentially get back up here, which would be a retest of key support, key resistance, and then fail again and sell back off. If we lose this green trend line, it's going to look like a capitulation event. We're going to roll back over and get a very powerful move to the downside because we have lost key support, just like we did right here when we lost this key support in white. I would expect the same thing to happen if we get rejected in this area again, come back down to the bottom of the channel and retest like the bottom 1600, high 1500 range, at which point in time I will be looking at that as a very key buying opportunity. So potential that this is going to switch back around, but once again, gold is still very clearly in a macro uptrend on the monthly, but it's also inside of a macro downtrend on the weekly. Okay, so that is gold potentially flipping back over bullish. Now let's look at silver. There's a silver shortage. There's no more silver. Everybody wants your silver. Is there really a silver shortage, or are all of a sudden silver mines and silver sellers, like actual exchange, like the actual mines that make the silver, withholding their product because they're speculating that in the future silver is going to cost more, so they're not selling it? Is there a massive premium on physical silver? And are these actual silver dealers, the middleman, doing the exact same thing? They're speculating that silver is going to go into an uptrend, so therefore what they're doing is they're holding back supply, or they're charging higher premiums on supply because they are now no longer just making their percentages off the top. Now they're speculating, which is not what they're supposed to do. Silver mines are not supposed to speculate on silver prices. They're supposed to mine silver and sell it, and then mine more silver and sell that. Same with these middlemen. They don't make their money by speculating. They are not traders. They are not investors. They make a percentage. They buy it cheap and they sell it more expensive, or they buy it expensive and they sell it more expensive. They do not speculate on the price and say, we're going to buy it and buy it and buy it, and then we'll wait to sell it in the future. That's not how they make their money. That's how people go bankrupt, okay? Because that's not your job. In the same way that typically when a market tops out, what happens is over speculation by companies, by individuals, over leverage and whatnot. And not to get off topic right here, but a company like Tesla buying Bitcoin, speculating in Bitcoin with its balance sheet at the top of an already parabolic uptrend, to me looks like a company speculating on assets. But that's not their job. They're not supposed to speculate on assets. Tesla is supposed to create things. They're supposed to make, panels and cars and like technology. They're not supposed to speculate on digital assets. Okay, so that's what has me worried right now, that silver is doing the same thing Elon Musk is doing, speculating when they shouldn't be doing that. That's not what their job is. Can they do that? For sure. Is there funds to do that? Can they do that with their private money? For sure. But when I see actual mines, companies, and whatnot speculating on assets, that worries me a little bit, because that's typically what happens when things get top out and get wrecked. That's when mutual funds get destroyed, family offices, exchanges, they go bankrupt because they were speculating on higher prices and they were wrong, or they were speculating on lower prices and they were wrong, and they were over leveraged, so they get just wiped out. So now let's look at silver on the weekly and see what is happening. Silver has been more bullish than gold. It has been operating inside of a weekly channel that, once again, you can't see because there's too much going on the chart, but it's been operating on a weekly channel, which basically was the top right here at $30 and the bottom back here at like $22.50. Okay, and it's basically just been going sideways as where gold has been like selling off like slowly. Okay, so now look what is about to happen right here that has not happened yet, that happened on gold. Gold went into a weekly downtrend. It crossed the 8.21 to the downside, and then it had a capitulation event of roughly, when we looked, it was like 8 to 10%, and since then has been in a confirmed weekly downtrend. Silver is very clearly below the 8.21 moving average, and they are like literally a line away from crossing. They are as close as possible to crossing right now without having actually crossed over yet. So everyone is extremely bullish on silver. Everyone is very highly buying silver at the highest premiums that I have ever seen in these markets looking back like 30 years. The premiums have never been this high. $11 and $12 for silver eagles, Cougarans, Maple Leafs, all these things, the Bretonias are at like $12, $10, $9 premiums. Even just regular old silver rounds, and bars are like impossible to get right now. Typical rounds from just whatever mint are still selling at like $5 to $7 premiums. So everyone is speculating that this is going to go higher when it's very clear technically based on a weekly chart that we're getting ready to enter into. Now, could this be averted? For sure. If we get above 25, 60 or something like that and start bouncing and consolidating, moving back up, we could very easily avert this cross to the downside. But right now at the cross, I'm seeing the less, there's almost no reason right now to potentially enter into a strong silver position anticipating higher prices when everyone is clearly betting on that. The miners are betting on that because they're withholding product, anticipating that price is going to be higher in the future. The middleman, the actual gold and silver dealers, everything from your local pawn shop to all these online dealers are speculating by holding back product, assuming that the price they bought it for, they're not going to be able to buy it for in the future. Therefore, they're either going to sell it at a massive premium or not sell it at all in order to sell it at a higher price later on. So now, once again, you have companies whose business plan is to make a percentage. There's, a mine or a middleman is supposed to make a percentage of the deal. They buy it cheaper and then they sell it for more. They're not doing that right now. They're buying it and buying it and buying it, creating a bottleneck in the system because they're buying up the supply. They're the middleman, and then they're not selling the supply the way that they normally do. So there's a change in what's happening, but it's not the change that everyone's talking about. Everyone is saying there's a massive demand. Everybody needs silver. There's no more silver. Don't sell your silver. Buy silver at the highest premiums they've ever been at. Speculate on silver. That is literally what happens at the top of markets, because then all of a sudden everybody's wrong, and then they rush to get out of these positions, and then it causes a capitulation selling event. So if we get this cross to happen right here, algorithms on the weekly on silver are going to flip and then get bearish. We are already inside of a bearish pattern based on the parabolic SAR. We're about to cross the 821 to the downside. We've already gotten the hard sell signal. We got the hard sell signal outside of the bullish control zone back here. And now what is about to happen? The histogram is very clearly below the slope line. The slope line has stayed blue this entire time, and the slope line is very clearly about to flip over red. It is basically flat right now. It's about to lose the last bit of slope that it has and then sell back off to the downside. All these things right now are pointing to the downside on silver. So where does that tell us our target's going to be? Based on what gold did, the initial move was down to the 50-55 at 23.50, and then after that, it will move down to the 89 exponential moving average, which is $21.76. So my target on silver, back to the bottom, $22 very clearly. If gold starts to capitulate also, I think silver will sell off violently as well, and we will very, very likely see silver back at $19.50 or $20, okay? And the breakout for silver was above, the same way breakout for gold was above that 1350 mark. We have a very strong resistance back here, essentially on silver at 1850, which is still slightly above the 200 simple moving average. So we have a cluster of moving averages down here that we could potentially hit down between like $18 and $20. So there's a lot right now pointing silver down to like $18 to $20. So believe what you're hearing from all these people. There's a shortage and there's no more silver and everybody wants all this silver. There is a false created demand right now due to supply constraints, in my opinion, okay? Because mines aren't selling their silver that they should be selling, that they've always sold typically. So that is causing a supply constraint. There is also a supply constraint because a lot of mines have actually been shut down and had to decrease capacity because they could only have so many workers working at a time. So a lot of them mine multiple things. So, obviously they're going to mine their gold because it's more per ounce, or, they don't have the same production capacities, maybe cut by 50% or 25%. And then on top of that, you have the middleman creating a bottleneck as well, because they're still buying the same amount or more, but they're selling it for a higher premium, or in many cases, not selling at all because they're speculating that the price will be higher in the future. So you have mines speculating price will be higher in the future. You have middleman speculating price will be higher in the future. And then you have a bunch of other people speculating price will be higher in the future. So you have a triple speculation inside of a typical market that may be potentially topping out right now. So again, I'm extremely bullish on silver on the long run, but there is a bunch of stuff right now telling me that there is a high likelihood that we're going to be selling off violently inside these markets. So maybe I'm wrong. I would love to be wrong. I have plenty of gold and plenty of silver, and technically there's a lot of things pointing to the upside long term, but short to medium term, there's a bunch of stuff pointing us to the downside. And then obviously fundamentally, I'm extremely bullish on gold. Central banks are buying gold. I'm extremely bullish on silver because we need silver for infrastructure, for green energy, for electric cars, for everything. But I'm not talking about that. I'm talking about what the charts are telling us right now. And the charts right now are telling us that they're going lower. So again, these could very easily flip around, start to show some life and movements to the upside, at which point in time it would invalidate this theory, invalidate these indicators, and potentially point us back to the upside. But right now, they are not. They are pointing down very, very clearly. So now I'm going to take a quick break right here and then just grab a little drink, take a look at the comments, interact with the guys for a sec, and then we'll get into some actual technical analysis. So. What's up, J-Tree? Thought the inflation trade was overcrowded for about a month now. This just confirms it. Getting dinner, catch you later. Yes, sir. Check out KHC if you feel so inclined. Has some potential. All right, will do. What's up, Mr. Lex? Cheers to you as well. Yeah, I think honestly, YouTube's like dislike like watch count. They sent out like an actual message saying that basically like they're having issues with it. So because I noticed that as well. I was like, what the heck is going on here? And I noticed that as well. And then it's been like it would spike back up and I would see a bunch of likes on a video or whatever, or like a bunch of views, and then all of a sudden it would be like way down as well. So yeah, I wouldn't worry about it. And honestly, like it's very likely higher than it looks like it is. But again, YouTube has confirmed that they've been having issues with it. So do you guys have a preference if I look at essentially like the indexes, commodities, crypto, or tech, and in what order you would like me to look at them? I've got a pot of coffee brewing, so I'm going to run and grab a cup of that. And when I come back, based on whatever you guys say in the comments, we'll go that direction. So. All right, so let's go ahead and let's take a look at crypto first, and then we'll move through accordingly. So, all right, so Bitcoin, very clearly, once again, I'm on the weekly right here. This is the spot market on Bitstamp chart. Very, very clearly, you know, in an uptrend, blue, we have multiple histograms above it, green. We are very clearly in the bullish control zone and have been for quite a while. We very clearly crossed the 8 and 21 to the upside back here. And now we are developing very clearly an ascending triangle at the top of the range. We've been basically consolidating back here for what, 3, 6. This is our 9th week at these highs, like retesting them and consistently putting in higher lows. So once again, obviously like overall bullish situation based on everything. But I am seeing some very clear warning signs here. We have the hard buy at the top of the range. That is typically a divergence signal. We have, you know, I've talked about this a bunch of times, multiple green histograms, then 2 reds, then 3 greens, then 1 red, then 3 greens. And I told you the last thing I want to see after 3 more greens in a row is more than 1 red, because it shows we're losing strength very clearly. And now here we have 1, 2, 3, and now we're developing our 4th red week of histograms right here. Does that mean that the market is done and we're going to lose this whole trend and go back down to $3,000? No, not at all. what it does mean is that we are very likely topping out the trend right now, and we're very likely going to go to much lower prices as we see the first legitimate correction inside this overall uptrend. From when we put in the head and shoulders pattern right here that I called back inside of an overall macro bullish uptrend, we got the retest of the 21 moving average exponential on the weekly. That was back at $10,000. From that point, we have not touched the 21 exponential moving average again. So what I expect to happen is, if this is topping out like I suspect it is, or very close to topping out, I expect to move back somewhere in between 44,000 and 38,500 to retest either the highs back here or retest the 21 moving average or even the parabolic SAR right here. So very closely paying attention to these things. There's a very high likelihood that that is in fact what's taking place right now. So now, could we get continuation to the upside? For sure. Could we also get a throw over that looks like continuation to the upside followed by a capitulation event? For sure. My target has always and still is 62,000. Do we want to count? You know, if you go back and look at my videos over, it was like a couple months ago, I was very clearly saying my target to the upside was 62,000 for our next top or potential top. We hit 61,781. So if I was off by $219, I do apologize. Maybe we'll get there, maybe we won't. But very clearly right now, I'm seeing some weekly indicators that we're getting ready to top this out. Now here we got that bounce of the cross. We got the cross basically to the downside right here, hard sell, followed by the hard buy, which again, if we get a hard sell after that, it's going to look very clearly like my most reliable, bearish signal at the top of the trend, or bullish signal if we get an inverse at the bottom of the trend. So we got the cross back to the upside here. We bounced it and saved the cross right here. But what we need to see happen right now is we need to see this blue get above the previous top of our blue, which was at 92.33% on this indicator. But we very clearly have the knife trending down. And then here we have our top back here on the blue, which was back at roughly 38,000. And then here, very clearly, we have price action topping out in like the 60 to 62,000 range. So we have very clear bearish divergence on the weekly. We could invalidate that bearish divergence if this continues to the upside, but also in accordance to that bearish divergence, we're seeing some very clear bearish signs as well here. And again, I would expect that to come back down to that range we discussed. Does it have to happen? No. Could we continue to the upside and go to 100 billion, trillion, gazillion dollars? For sure, for sure. As long as we have more buyers than sellers, I think we'll probably continue to go higher, because that's how markets work. Now let's switch over to, actually I want to take a look now at the CME futures and see what's going on here. So look at the futures chart. We were talking about this and it's still playing out. Futures obviously gapped up on the open and left the gap back from 58,735. It is still got about a $600 premium over spot right now. So futures, new all-time high, or I guess technically it's not a new all-time high because we had this candle back here where it went slightly higher. But more importantly, the reason we're looking at this is I have a couple of key indicators up here. I have the Stoch slope on the bottom, and then I have the Fisher Transform right here, and then obviously our moving averages as well. Here, I'm on the daily now. We have a high right here. We then have a higher high right here based on candle closes. Then we have a higher high right here based on candle closes, okay? From each of those highs, let's look now. We have a high here. We have a lower high here. We have a lower high here. That is triple divergence, triple bearish divergence at the top of a trend with plenty of bullish and also obviously plenty of bearish things in mind. So, when we're in an uptrend, I always give the nod to the bulls to continue that uptrend until we don't, because like we talked about, the top only happens once, the bottom only happens once. The likelihood in between of 200 days of calling the top by one day is very unlikely, but I do sure look for warning signs. Same as when you're driving the car. If you're driving your car, you can either say, well, I haven't crashed for 3 years, so what's the likelihood I'm getting crashed today? That's what people are doing right now when they speculate on these assets. They're saying, well, we haven't crashed for years, so what's the likelihood we're going to crash now? So they're just closing their eyes and just going all in on the gas pedal, driving down the street. What I like to do is I like to look out for warning signs. I like to watch the traffic signals. Do I see, a yellow light about to turn up in front? Maybe I should start slowing down, hitting the brakes a little bit. Do I see someone driving erratically in front of me or all around me? Is someone brake checking me? Is someone swerving left and right? Maybe they're drunk at the wheel. those are things that I like to look out for to avoid a crash or to avoid like the results of a crash, because I would rather get out of the way and not be part of the crash than just get in an accident and say, man, what were the chances of that happening? It hasn't happened in 3 years. Well, guess I was wrong. Guess I didn't see that coming. I like to see it coming. So what I'm seeing right now is triple divergence on the Fisher Transform. Now let's look at the Stoch slope. 1, exit the hard. This is our very clearly bullish control zone, less bullish control zone, less bullish control zone. Hard sell, exit the bullish control zone, hard sell, exit the bullish control zone, and we are at basically the entry to the bullish control zone. We could potentially exit it. Maybe we keep running to the upside and invalidate all this. We have our Stoch topped out right here, our Stoch topped out right here, and our Stoch topped out right here. A series of lower highs. Once again, triple bearish divergence. We have the RSI in white right here. We have the slope line or EMA of the RSI in yellow right here. We have 1 top, we have 2 tops, and we have 3 tops. Once again, triple bearish divergence. So we have a bunch of bearish divergence at the top of an uptrend that we've now been sitting at the top for like 9 weeks. What is that starting to look like? I mean, I want to say it's bullish that we're just going to eat through these sell orders and then burst to the next target, which is very likely. We definitely could be at 70,000 or 80,000 or somewhere in between very soon. 68,000, 72,000, 80,000, at which point in time we're very likely going to hit 100,000, or there could be distribution taking place right now, and it's just a matter of time before this sells off. So let's just keep that in mind. So now I want to look at our weekly chart back on Bitstamp with a couple different indicators on. Some that I don't show often, but I use every day. This top one here is the Fisher Transform. Next we have waddah explosion. And then the third one is on balance volume. Again, if you're not familiar with my indicators, you don't use them, you've never used them, but you watch me use them all the time, you can go and get them for free. Go on TradingView and search TJD or whatever. You know, if you like my account on TradingView, you can get access to all my indicators and see them, see when I post new ones, whatever. But you know, they're all free, so there's no reason not to use them. You can basically change them for whatever settings you want for different markets or whatever, but essentially I have them all set up so that they're like functional. The increments, like times, like numbers that they use are all based on like Fibonacci numbers or high rate of success numbers that I use like myself. So highly recommend it, and again, it's all free. Just another tool that I provide to the community. So now let's look at what's previously happened on Bitcoin on the weekly when we topped out, okay? Matter of fact, hang on 1 second. I'm just going to grab a little sugar for my coffee, so. And then we'll get rolling. And I actually want to turn it off because there was a little left. And then we'll pick back up in like 2 seconds. Well, 2 minutes. Ooh, all right, that's much better. Got that super black coffee, and it was just I mean, that concentrated brew, so it was just a little too intense. But all right, so yeah, back to the weekly here. So now let's look at what the indicators are for when we topped out previously. Look at the water attar explosion. We have like multiple green histograms in a row, and then we peak right here, and then very clearly enter into a bear market. Then next time we even come close to that on the water attar explosion, we have the peak right here, followed by a second peak where we go slightly higher, and then once again we enter into, I wouldn't technically call this a bear market, more of like a bearish consolidation inside of like an overall bull trend, because we did flip over like above the 200 exponential and whatnot. But again, this is a multi-month downtrend from like that 14,000 in June back down to the bottom in March, which once again I did call this capitulation event very clearly. So and then finally now here we are once again at the top, and now look at the water attar explosion. We have very high levels of volume, very clear, you know, potential top range here. We have a first peak, a second peak, and then multiple lower peaks after that. So again, I'm not saying this has to be the top, but there's some very clear indicators. And now let's look at the peaks on, actually, you know what? I want to zoom in here real quick too and show you something else that's very important that took place right here. After that first massive peak here, we flipped over yellow, and then we started like the capitulation sell-off. After, this is our blue slope line that turns yellow when the slope is losing strength and it's starting to the downside. So you can still have green histograms, but, or green histograms, but it's selling off. And then once again, we have peaked out the blue. We have lost the slope now, and we're selling off. This indicator uses volume and price to tell you direction, okay? So this is once again telling me there's a very high likelihood that we are topping out in this range. Now let's look at the Fisher Transform. This does not call the exact tops. If you notice, this first peak right here, and then this peak right here, that is the top, but there's divergence from like that first peak right here when we broke out of the previous all-time high. We got a bunch more energy come in, and then we just sort of like floated up after that. This next one here, we have the peak right here, and then we go slightly higher, and we put in a divergence between the indicator oscillator on the weekly from the actual peak in the market, and then we sell off. And then once again, we put in bullish divergence, bearish divergence at the top, bullish divergence at the bottom. So obviously this thing works pretty damn good on the weekly if it literally told you when the top was and when the bottom was. So it's worth checking out. And then also now here we have a very clear peak here on the weekly back at this top at 39,000, 40,000. And then now here we are potentially, we have not topped out yet, but potentially the likelihood of getting above this peak right here is very unlikely. You know, based on like how many times we've gotten up that high previously. You know, this is essentially like the highest peak that we've had going back to 2013, which that previous peak up here was the top, and then the one that was higher than that was the exact top back in 2013 prior to the final bull market top. And that was what we call a double top bull market. We topped out once, came back down, and then we topped out again, and this was inside of a single halvening. As where the last one that took place, we didn't really have that. We didn't have that massive sell-off, that massive parabolic peak. We sort of just went like less parabolic, but consistently. So what I'm saying is we could potentially be having a situation like this where we top out, come back down, and then enter into a new parabolic peak inside of that halvening cycle. But more than likely, based on the level of this peak right here, we are very likely at one of these key peaks right here, which does not mean that the bull market has to end, but there's a very high likelihood that we are very close to at least a multi-month consolidation or, you know, pullback, basically retracement. So again, top right here was not the actual top. So now we had very clear divergence develop from this peak to that peak, bearish divergence. We got a bearish sell-off, and then we took out the high continuation. So now that we've taken out that previous peak right here and we're at a higher high, essentially same thing could happen. We could have this come up, it comes up to a lower high and then peaks and starts to sell back off, at which point in time we would have from this point to our current point right now, once again, bearish divergence. So we just have to be careful because there's a lot of bearish stuff starting to show up in the chart. We have the sell-off right here. We have the peak, just like we talked about right here. The peak, just like we talked about right here. The same way that bearishly at the bottom of the sell-off, we have a peak in volume. It's not nearly as substantial, but you can see this is very clearly the highest red candle sell-off that we had right here at the absolute bottom of the trend. So, and now we're looking at the on balance volume right here. Okay, so you will notice that the on balance volume did not flash red on the slope line. Essentially what this is the on balance volume is the blue and the purple right here, and all it does is it takes the volume and the price and then puts them together, and then if there's more buying based on the combination of the volume and the price, then it will print a blue line right here, and then as long as that's in an uptrend, it will be a green slope line. And then when there starts to be more selling than volume based on the actual volume being sold and then the price it's being sold at, it will print one of these purple lines right here and start to slope down. And once that's underneath it for long enough and we lose the slope on the indicator, it will turn the slope red, and that means we're overall in like a bearish or consolidation pattern. So obviously on a long-term trend of a positive asset that's going up in price over, you know, a 10 or 12 year period, you would expect it to be like 75 to 90% green with a couple small red areas, which essentially are calling like areas where you don't want to be exposed to this asset or you want limited exposure to the asset. And then once again, it goes back into green and you would expect the uptrend to continue. Okay. So still looks decent, but we're starting to lose. What's essentially happening is we're converging. Here we're diverging. We're at the green and the blue are touching. And then here we're diverging. We're getting further away. The price action, the blue is getting higher, faster than the slope line is. And then here we start to converge. They start to come back together at this little capitulation event right here. And then they start to come back together at this little like sell-off event right here. And now here, the same thing is happening again. They're starting to come back together. So we were diverging for months and months and months. And, you know, the equivalence of $30,000 in gains. And then for the last couple months, we've been converging. They're getting closer together. So now let's switch over to the daily. And I want to talk about what this is telling me right now. So now looking at those same indicator oscillators, we can look at our various points. We can look for divergences taking place. We obviously have the triple divergence. You know, we have sell-off at the bottom, sell-off at the bottom. We have highs at the top, and then lower highs. So we have some very clear divergence taking place on these. But I'm not worried about those right now. What I want to talk about is this. I want to talk about the on-balance volume, okay? Because what it's doing right now is telling me something important, okay? This was the last time that we had that happen, where it flipped over red. And it's just a tiny little spot you can see where it's red right here. And that was back in September of 2020, okay? And what was that? What was this point right here? That was the head and shoulders where everybody was extremely bullish, and I called it out before the dump. And I told everybody, we're getting ready to sell off. We're getting ready to dump. Afterwards, we then put in bullish divergence. We're above overall uptrend. It's been great. We have not printed a single red slope dot anything since then until we got all the way up here to the top. And now for the first time, let's look back even further. The previous time when we saw that was our capitulation event, you know, a year ago, basically. So right before the capitulation event, that happened. Right before the head and shoulders pattern, that happened. And now where are we at right now? We have red once again showing up at the top of a parabolic uptrend where we have a bunch of bearish divergence taking place. So again, could we continue on up to the top and we're fine, everything's good? Yes. But what is this telling us? It's telling us for the first time in basically like, you know, months since that event and then a year since that event that there is actually on balance more selling taking place than buying. So how do asset prices go up? There's more buyers than sellers. How do asset prices go down? There's more sellers than buyers. So for the first time, there's more selling taking place at this level than there is buying taking place. So the idea of this indicator is to tell you what smart money is doing and what dumb money is doing. So this tells you the smart money is buying when it's green and the dumb money is buying when it's red. Because price is still going up right here, but there's more selling than buying taking place. We're putting in new highs on this asset while there's more selling taking place. So there's less buyers pushing the price up higher, but more sellers are having the price go sideways. So typically what happens after that takes place is you get a capitulation event. So again, does not mean the trend has to be completely over, but it seems very likely to me that we're going to get a situation, you know, where we have like one of these massive sell-offs potentially taking place, you know, where we get like a 20 to 50 to 80% sell-off, something like that. So again, not getting overly bearish on this thing. I'm just keeping perspective as to what's actually taking place in a space where everybody is just blindly bullish. I'm looking at the actual warning signs. I'm looking at the light turning yellow. I'm looking at the erratic drivers in front of me. I'm looking at the over leveraged markets. I'm looking at the FOMO taking place all around me. So that's what I'm seeing. So now let's go to the daily chart. And as a matter of fact, we pretty much already went through the daily, all the divergence taking place. We've talked about the constriction of the 821 cross right here. The 821 almost crossed but got rejected here, almost crossed got rejected here, and now we're just kind of hovering around. We could very easily eat through the remainder of these sell orders, and then our bullish pattern breaks out and we go to the upside. We could very, very easily have that take place. Or this could be, patterns don't always work. That's why they're not 100%. This pattern that we have right here, the white pattern that we discussed and I showed, in my rationale. And if you didn't watch the last live stream, I went into extreme detail on how an ascending triangle works and the significance of it and what I was expecting to take place. And then inside of that, you can see right here, the very clear head and shoulders, inverted head and shoulders taking place. And essentially what I was talking about, I think I moved this down to demonstrate something, but very clearly, we have an inverted head and shoulders taking place inside of a bullish, which is bullish. Inverted head and shoulders is bullish, inside of another bullish pattern, which is this ascending triangle at the top of a range. And both of these have a very high likelihood of breaking out to the upside, over 50%. The ascending triangle is like a 66% chance, 66% likelihood of breaking out to the upside. And then also it typically breaks out between 66 and 75% of the pattern. So it's very close to breaking out to the upside statistically. Could it come back down to the bottom, retest, and then come up and break out? 100%. Could it come back down to the bottom and then fail and break out to the downside? 100%. But right now I am seeing an overall bullish market with definitely some high likelihood potentials of bearish things about to take place. So we have all this divergence, bearish divergence taking place. So for the first time, what we have in this whole entire trend is, instead of just a bunch of bullish signals, we have a bunch of bearish signals and a bunch of bullish signals. So that's like conflicting signals between these different indicator oscillators, between different markets, because we have bearish divergence on the daily, on the futures, but we don't have bearish divergence anymore on the daily on spot. We could very easily get a new high right here and develop bearish divergence again on spot, but right now we don't have that between these 2 points. So we had it right here, sold off substantially, but now we don't have it right here. We could very easily just push up, get a close above 61,000. We could come up here, hit our target, that we've been calling out for months of 62,000. We get up 62,000, we close up there, it's a throw over, we sell back off, we print triple bearish divergence, and capitulate down and get one of these big moves back to one of our previous targets at like 48,000 or 38,000, corresponding with like the moving averages or something else that we've discussed, which I've went into quite a bit of detail on those, so I don't need to keep talking about them over and over. So now let's go down to the shorter time frame, and I want to look at like sort of a micro view of what I see taking place right now. This is very clearly what's taking place to me right now is very clearly a descending triangle taking place. We have a high base on close right here. We have a high base on close right here. We have a high base on close right here. And then at the bottom, we have very clearly a low based on close right here, and then a series of those exact same lows. So we basically have a triangle pattern, which there's just so much going on right here. It's going to be difficult to actually like draw this stuff out. But essentially, I'll throw it on here. I know there's just too much junk, but this is basically what we're looking at now. We now have inside of this on the 4 hour a descending triangle forming. Again, the likelihood of a breakout to the upside is still 33% in an overall bullish trend. But the breakout to the downside is 66%. So more than likely, this thing will break out to the downside. But it could easily be invalidated, and that's fine. But the most important thing is that we're paying attention to all these things. We're not just assuming everything's going to go to the upside. Because what it looked like over the weekend is, it looked like we broke out of our ascending triangle and of our, head and shoulders, and then we're going to get continuation. But we can't validate it because it took place over the weekend. So half the market participants aren't in the game. You cannot have a football game and one of the teams has not gotten on the field yet. Because if the one team is not on the field yet, essentially the difference between spot market and futures markets, you have one team out there throwing around the football, passing to each other, and then running in touchdowns. And then the other team shows up and goes, the game hasn't even started yet. So you can wipe all those points right off the scoreboard and we can actually play the game now. And that's how I look at the weekends. Okay, they very often will be a prelude of what's going to happen. Okay, spot market runs up on the weekend, and then futures opens, and then follows through, and then we get upside movement. Great. The one team was out there practicing before the game started. They scored a bunch of touchdowns. The other team shows up, and then they score a bunch of touchdowns against the team that wasn't there practicing, and price goes to the upside, or vice versa. Spot markets sell off over the weekend, and then basically futures opens up and we sell off. But typically, who's bullish on the market? Spot market is. Who's bearish or realistic on the market, or based on technicals? Futures market. So statistically, like 75% plus of the time, you're going to see bullish moves over the weekend. What we need to make sure happens is the two markets come back into line. Whether or not we fill the gap is not 100%, but more often than not, it does take place. So we could very, very high likelihood get a pushback down to like, what was it, 58,400 or something like that. Come back down 58,700, depending if you're on the daily or the 4 hour, and close that gap. That's fine. We also have this gap we just left behind right here that we did not close, which is basically at 54,175. And then, we have massive gaps that we left behind way back here at like 24,000. We never closed that gap. We have another gap back at, I think it's 18,000. Yeah, 18,300. Do I think we're going to fill those gaps? Not necessarily. Do we have to fill those gaps? Not necessarily. There's a thing called a breakaway gap. A breakaway gap is where you gap up and then you never come back to fill that gap. But the likelihood of that happening is very unlikely. So for us to get one or two of them, that's fine. But we don't want to just count on every gap we get now being a breakaway gap, because a breakaway gap is like less than 20% of all gaps. 80% of gaps get filled. Sometimes it takes months to fill those gaps, but 80% of them do get filled. So 4 out of every 5 gaps that we leave behind, we're coming back to. So that's all I'm paying attention to. Paying attention to quite a few bearish things showing up on here. I don't want to get overly bearish. We could very easily get the breakout, consolidation, and continuation. But there's definitely some signs, some signals, some things in the market telling us that we need to be at least de-risking or prepared to de-risk from these markets. So let's switch over now and just start running down the cryptos. So Polkadot on the daily, we got the breakout above our pattern. Never made it down to our buy that we wanted off the 89, but got a breakout, consolidating above our previous resistance point. Overall, this looks bullish. We did get the hard sell cross down here. We're showing a bunch of weakness on the histograms here, but in all reality, if we consolidate here long enough, I would expect continuation to the upside, but it's just going to do whatever Bitcoin does. Doggy coin, Digga Doge, did exactly what we said. We have been literally talking about this for, how long? Since February. We've been talking about this since the beginning of February. How we were essentially operating inside of a descending triangle. This descending triangle, 66% chance it was going to break to the downside. What happened? We broke out to the upside. So that's why it's not 100%. But the key level that we were paying attention to was this blue line right here. We had resistance. It was support back here. And then here we had resistance again. We broke above it, closed, and then it failed. But as long as we stayed above 821, as long as we stayed outside of the red pattern right here, we were expecting our measured move of the triangle to take place, which that's what this blue arrow is. It is our measured move of the descending bearish pattern if we get a breakout to the upside. And you will notice very, very clearly, we closed above that line right here, and then we got a massive push up to the upside. If you just bought right there when we were talking about it, was over a 25% move to the upside. I think overall, what's the trade setup? The trade setup from the breakout, we very clearly discussed this with a 12% stop loss, hard or soft, depending on how you're looking at it. We were expecting a move up to the upside of 48%, over 4-to-1 risk reward ratio on the doggy coin. We're not quite there yet. We were literally a couple percent away, but you could very easily have taken profits along the way. Very clearly, this is the resistance, was the candle close top right there. So essentially, when we got up to that, you would expect selling pressure to come in, but there's no reason, in my opinion, this is not going to make it to the top here. If we can get a higher close on a daily than that 7.8 or 7.9, I might say 78 or 79 cents, but obviously 7.8 or 7.9 cents. Don't be like, he said it's going to 10x from here. I probably just said the wrong thing. But essentially, if we just close higher than this on a daily, I would expect it to come back up here, retest the resistance line here at the top, and then get the breakout. If we do get that breakout to the upside, I expect the pattern to play out and the overall break to take us to about 14.5 cents. Not saying that's going to happen. I mean, I still think Dogecoin is trash, but it's whatever. I mean, I like dogs and I like crypto, so why not bet on Dogecoin? I mean, if we're going to gamble, you might as well gamble on something you like, and dogs and crypto are fun, so let's do it. Uh, but yeah, same thing. You know, we're essentially just expecting a continuation of that move, but we see where the key resistance support are, and now you see my justification for taking these trade setups, obviously, very clearly. This is one that did work out perfectly and is working out even better now. We set up this chain link trade setup a while back with a 17% move to the upside and 8% move to the downside. We took it based on that same descending triangle pattern off of our blue support right here. Took the buy, did not come even close. Well, it came. No, actually, we got it at this point. We didn't buy it on this one. We bought it on this one. So actually, when we took our buy, it never even came back down close to our stop loss. Because this candle happened prior to our buy, and when it found support on the 89 and that bottom trend line is when we took the buy. So it never even came close to our stop of 7.5%, and we very quickly got the move back up to the top of the descending trend line, the descending triangle, the bearish pattern that was invalidated, breakout, retest of the descending line, and then continuation back to the top of the range where we got rejected. Obviously, took profits along the way. Once again, over 2-to-1 risk reward ratio. Where do we take profits at? Take profits at resistance. I buy support, I sell resistance. I just do that all the time, because if you sell resistance, buy support, sell resistance, buy support, sell resistance, it just works so many times. Sell resistance, and then the one time you're wrong, you sold something too soon, but you kept your profits. So if you did that over and over again, you're locking in profits, losing out on a little bit of gains, but overall, you're not giving back. If you didn't sell right here and then it came back down to the bottom, even if you bought the absolute bottom, but you never sold this whole time, you're right back to flush. That to me is being an idiot. You're an idiot because you were up profit in a trade and then you're right back to where you started. And then you were about no, it's not how you trade. You trade, you lock in profits. So once we get back to the top of the zone right here, once again, take profits. Do you have to close your whole trade? No. Is this financial advice? No. I'm not your financial advisor. I'm telling you what I do and why I do it, which is the most important thing. So here we are, consolidating at the top of the range. We're at resistance once again. The likelihood is that the longer we spend time at this resistance, the more likely we break to the upside. So, but again, it's just going to do what Bitcoin does. Uniswap, similar pattern, more bearish. Put in a high, put in a lower high, put in a lower high. Have not even come close to getting back up to that high. Barely have the 821 cross to the upside. The exorbitant amount of fees on this thing, I think, are really what's limiting it right now. If they could technically fix it and have the fees be reasonable, I think it would be more likely that this thing would actually function correctly and fundamentally be good and break out to the upside. Technically, it's not great. Fundamentally, it's a great idea, but obviously, could be improved, because you can't have a decent trade. You can't have a reasonable trade if your fees are going to be 20% of the trade or 50% of the trade or even 10% of the trade. The fees need to be in line with, what you're going to trade. So one reason that these decentralized exchanges are so good and so functional is they don't have KYC and they're not regulated. So people can launder money. So that's the reason something like this is good. But in my opinion, you should always do everything legally, because eventually it will catch up to you. Ethereum broke to a new all-time high, consolidating at its all-time high, daily close at the all-time high, obviously bullish. Still expecting the measure move up to, this is a measure move of our pattern, up to 2,452, or perhaps the 1.618 Fibonacci extension at 2,721. But again, if Bitcoin starts dumping, this is going to be a throwover and it's going to get wrecked. So we just have to be very careful and pay attention to what Daddy Bitcoin is doing. Not just what your favorite altcoin is doing and getting caught up in the craze. So basic attention token. This is one of the most bullish cryptos in the space. Consistently putting in all-time highs. Never crossed 821 back to the downside. I still expect this to come up to our next target, which I've been saying for months now. Target after target after target has been getting hit. $2 still in the cards for this. Still another 50 cents on a $1.50 trade. I mean, we got into this thing at 25 cents. Clearly, when it entered the bull trend, and it's literally just been hitting target after target since then. Fundamentally extremely strong, technically extremely strong. Do have to be careful though. It is starting to develop a little bit of bearish divergence from these 2 points. We could easily invalidate that and continue to the upside, but I mean, this is a completely free trade. I got into this at 25 cents and I took out substantially more than I put into it, and I have substantially more than I ever. It's all free. All of it's free. That's the best trade to get into, and that's why you take out half on a double. If you buy something at $10 and then it goes up to $20, it doubled. So now you take out half, so you have your entire principal back out of it. If you put $1,000 into something and it doubles to $2,000, and then you take your $1,000 back out, you still have $1,000 worth of it, but it's free. It's free $1,000. So you can literally just leave it there and let it do whatever, and you still have your money back, and you still have the same amount. I mean, that's why it's so important to take out half on a double. I mean, that's one of the most fundamentally simple reasons, to do something is. You're essentially in a no-risk position. It's free money, and it can just run forever, and you don't have to worry about it. Or you can continue to trade with it and do what you want, but at least you've locked in those gains. Because the worst case scenario is you buy something, it goes up 300%, and then eventually it capitulates down, and you're at a loss. So you were up 300%, and then you end up at a loss. That's horrible. It sucks. Theta is next. Daily on Theta. Somebody asked to look at this not too long ago. I don't really trade this or anything, but overall it looks bullish. Ascending triangle. It looks very similar to Bitcoin. We'll see what happens with it. It's showing a lot of weakness here at the top, but in my opinion, the weakness here as we just float sideways, it looks very clearly to me like basically like a bullish reset. The indicators and oscillators are going down, the side price is going sideways, but it could easily just capitulate from these levels and start sell off. We're at the 3.618 Fibonacci extension, so key area you would see resistance as we did at the 2.618, as we did at the 1.618. It could very clearly just continue on in the uptrend, but once again, if you got to be up massively on all these cryptos at this point in time, so you have to be an absolute idiot not to just lock in your gains. Neo once again putting in highs, still going crazy right here, but we do have to be careful with Neo because overall it's one of the weaker cryptos. Any crypto that has a chart like this to me is still shitty because we still have an all-time high and then we have a less than all-time high. So if all the stuff that's taking place in this space right now, all the new money has come in, all the buyers have come in, all the institutions have come in, and we still are not back at the previous all-time high, that means one of two things. This either sucks and it's never going to get back to its all-time high, or is way too overvalued the first time. Or both. It could just be way too overvalued the first time and it sucks. So everybody's getting extremely pumped on our next one right here, and in my opinion, not quite the time yet. When this gets to $86, it'll be at 786. I would expect resistance, potentially sell back off. But until it essentially closes a daily above 147 or it gets a wick above 200, still looks like shit to me. Overall, bullish because it's a crypto and everything's bullish in the crypto space right now. But not good. Not good overall. Compared to every other crypto, it's probably one of the weakest charts. There's a bunch of charts that look like that, but it's one of the weak ones. XRP. Everybody's going nuts over XRP right now. I got back into XRP at 17 cents back here. If you watch my video and you saw me call out 17-cent target on XRP and saw it get literally tagged to the T perfectly, I think I said 17.2 cents. Massively in profit right now. It's like over 10x since then, almost 10x since then. This week, it broke out of the pattern that we've been talking about, the ascending triangle. Flat top resistance right here, clearly higher lows. We broke out. We got the measure move of the breakout. It was supposed to take us over $1.08 from that 60 something cents. And obviously, we got even more than that. XRP to me is a massive pump and dump. We get these key breakouts, these massive bullish candles come in, and then it just sells back off. It sells off the whole candle. Massive bullish candle, sells back off. Massive bullish candle, sells back off. Only 50% here, which is good. But now, what do I expect to happen from XRP? I think it's probably going to sell off 100% of this candle and come back down and retest at 66 cents. So, once again, very key to take profits on this. Has not reached its all-time high. XRP, in my opinion, still looks like shit. It's not going to take over the world. It's not going to go to $300 and something or whatever. People are idiots. They're in a cult, the XRP cult. And if you sat in the XRP cult for this entire bull run and you're still not back to the previous all-time highs from before, or you're only up you know, not everybody bought at 17 cents right here. A lot of people were buying at 25 cents or 60 cents or whatever. So great, you're up now 100%. Meanwhile, other stuff has gone up 1,000% or 10,000%. I mean, XRP is trash. 786, $1.57. Next area of key resistance, $2.22. Final area that we would have to worry about is the previous daily close, $2.81. Diversify. Don't buy all in on XRP. I mean, it's too late now. If you did, obviously that's good and everything. But whenever you hear somebody say all in, run the other way because they're an idiot. They don't know what they're talking about. So, Riot, obviously Bitcoin mining stock, inside of a descending triangle, doing what Bitcoin did, put in a high, put in a lower high, put in a lower high. This is actually worse than Bitcoin looked. It was probably overvalued in here. There's a bunch of gaps it left behind back at like $23. I would be real careful with this one. I have no interest in it right now. It is close, however, to getting some bullish signs come in here, but we'll have to see. MicroStrategy, technically starting to look decent above the 21, looking to get the 821 cross. Again, this thing got way overvalued. There's a massive premium on it. And since then, we have ETFs now. This was essentially just a fake ETF. This is like a marketing campaign by Michael Saylor. Not bullish on it. I would probably never get into it, but if you did, that's perfectly fine. So now we're going to go over to our, let's look at the indexes real quick. I'm going to grab a drink. Very refreshing. Hang on, I'm going to check out the comments real quick here. Too low, welcome. Which are we going to smash? I mean, it could go either way, man. It's bullish and bearish right now. There's too much mixed signals. Too many people talking about the 20 weekly. We are going to drop 20% below it or bounce 10% above it, in my opinion. Yeah, I don't know. I never hear anybody talking about the 20 weekly, but I really don't watch a lot of other people who are like, I don't have social media or use social media. So, you know, I don't see a lot of that stuff happening either. But I totally agree. When too many people are looking at a specific area, one of two things happens. We either completely overshoot it or like front run it. So we either underperform or overperform. But if we start selling off, these markets are so leveraged, stocks, cryptos, everything is so leveraged, we're going to see like capitulation events left and right. Yeah, if we come down to the 50 weekly, it's going to probably be the end of the bull run. The image on the left of the chart. Wait, what's your question about the image on the left of the chart? Yeah, I don't know. I'm not sure what you're talking about. The image on the left of the chart is my computer. That's my rig. That's just literally like I take the glass cover off and point the camera at it. So that's what that is, if you're curious. Good evening to you, K Ritz. Good to see you back, brother. Will Coinbase IPO have an effect on Bitcoin price? People seem to feel that the whales are keeping Bitcoin down so they can moon it for the IPO. I mean, in my opinion, it's probably the opposite of what you said. My opinion is the opposite of what you said. That they're keeping the price up until the Coinbase IPO. Because they IPO, it gets a ridiculous valuation based on its profits and the Bitcoin price, and then it's a sell the news event. Typically when there's a big event like an IPO or something like that, there'll be a price run up in anticipation of it, and then a capitulation event afterwards because everybody bought on the way up anticipating higher prices, so therefore it like sells off massively afterwards because there's no new influx of buyers or less influx of buyers than sellers. So people take profits after that event happens. So in my opinion, it's a buy a rumor, sell the news, and we're probably going to see a capitulation event. I mean, Coinbase made a ton of money for sure. So, you know, is the valuation too high? I don't know. Are all valuations too high right now? In my opinion, yes. But overall, I think it looks good. But no, I think it's the opposite of what you said. I think it's the complete opposite. Why would whales purposely keep the price down before the IPO? It would be the opposite. They would keep the price propped up as long as they can. The IPO takes place, and then Coinbase IPOs at a ridiculous valuation because of Bitcoin price, and then also because of its profits and its numbers and everything looks good. And then afterwards, we see a capitulation event where everybody sells off their Coinbase stock. There's people that have been investing in Coinbase for years, and with this IPO, they will 100% be selling massive positions. Stakers like will be deleveraging or taking profits after 100x's. And then all the idiots buy in at the top after the IPO. Could the IPO still run up another 100% or 200% from the IPO price? For sure, especially with like the IPO craze right now. But if you look at the majority of, I can't say majority, if you look at a lot of like SPACs and IPOs that have taken place this year, they look like shit. Most of those IPOs will go up for a little bit and then sell back lower than the initial IPO. You almost always, the general rule, old school rule, or maybe not a rule, but a technique for IPOs is like smart people. If you're not in before the IPO, you wait until after the IPO and it sells off 50%, because most all IPOs eventually sell off 50%. And then around 35 to 50%, smart investors will get into that, believing in it the whole time that it has strong fundamentals, but just waiting for the opportunity to get in, because everyone knows the IPO, the insider trading, all that stuff, the valuation's going to pump it up way. Now, because of the craze going on right now this year and cheap money, it's a little less valid because a lot of the IPOs ran up way more than they typically would right after the IPO. So people have just been FOMOing into IPOs, expecting like 100% price appreciation and saying that quote unquote things are undervalued. But in my opinion, they're not undervalued. Money is just so cheap. People are looking for anywhere to put it. You can only hide so much money under your mattress. I mean, people are buying up anything that's potentially valuable or scarce because money is so cheap right now, and everyone is so sure that dollars or whatever your currency is going to go to zero. But the truth is, the system has been going forever, for whatever you want to say, depending on if you want to count our previous like quote unquote defaults or the changing of the system from gold backed or to the petrodollar or whatever. I mean, essentially like, or when the US became the world reserve currency, there's a bunch of different like markers that you can go by. But essentially, like, yes, I totally agree macro that like fiat currency will go down, dollars will go down, other currencies will go down, that asset prices will hyperinflate compared to them. But right now, there's just tons of extra liquidity being pumped into the system. So it's creating like all these crazy little bubbles inside of, this situation. But even when you pump a bunch of liquidity into the system, there's still like peaks and troughs inside of that. So I think right now we're close to the peak at many of these different things. Now, again, these things the bubbles can always get bigger and last longer than anyone expects. So I'm not by any means, again, back to the beginning of the video, we're in basically like a 1 year massive bull market on stocks, on crypto, on everything. Like, we're basically like just over the 1 year period for all this stuff just going nuts. So, the likelihood of picking the absolute top is 1 in 365 right now. Do I like those odds? No, they're terrible. You know what I mean? I don't want to pick those odds. Like if somebody was like, pick a number between 1 and 365, like what's the likelihood of you getting it? It's 1/3%, less than that. So it's, but I think we're very close, but could we run up another 50%? For sure. But at some point in time, you have to look at the risk reward. And that's what I'm worried about right now is the reward to the upside is very low on a lot of this stuff, as where the risk is getting very high. And, and if you look at it like this, Bitcoin's at $60,000 right now. So if we hit one of these massive valuations, if we hit $100,000, that's not even a double. If we hit $250,000 from $60,000, that's only like a 4x. So we're at the point now where like it's diminishing returns. There's not that much potential move to the upside. You know what I mean? Like percentage wise, like obviously if you bought at $60,000 one Bitcoin and it goes up to, $250,000, like that's awesome. You made $190,000. So you made, $100,000 after tax. That's great. But in all reality, the risk reward ratio is not that great right now, because essentially, depending on how you look at taxes, if Bitcoin sells off right now, if you make 100% on your position, after taxes and everything, because Bitcoin goes to $250,000 and then you sell one Bitcoin and $250,000 to pay taxes on it. So you made $100,000 on a $59,000 investment. What did you really make? You make like a 1.3 return. You made back your money, like doubled your money plus another like 30%. That's great. But if it goes to the downside, if it has a 50% sell off right now from $60,000 back down to $30,000, you lost half your money. So there's a lot of like diminishing return situations happening after like a parabolic uptrend right now, not to mention like quarterly profits being taken, rebalancing of portfolios, potential tightening of economic situations. All of a sudden you're seeing credit card debt shooting back to the upside. All the quote unquote, people are mad that they send out stimulus checks to people or they're saying whatever. But in my opinion, like if you think about what like the US sent out to people as a stimulus check, I think most you guys or most people that got stimulus checks got around, I want to say it's like maybe $3,200 in a year. I think the first stimulus check that people got was $1,200. And then I think Trump sent out another, I think he sent out another 600. I don't know. I'd have to ask someone. I think he sent out another 600. And then I think Biden sent out another 1,400. So in all reality, I think they sent out a total of $3,200 to a person. And then there's a bunch of other programs and stuff like that they've been doing, the unemployment and pandemic assistance. So don't get me wrong, and the tax credits for kids. There's been a ton of money sent out, but not everybody got access to all this situations. Some people got no money from any of that stuff, but most of those people were probably invested somewhere else, so they made it back exponentially. You know what I mean? So, but in the end, it's really not that much money, and there's a lot of people that maybe just got the stimulus or just got some unemployment or stayed working and only got the stimulus. Those are the people that really got screwed through all this. Because the people that had assets did very well. The people that invested or owned property or whatever during this whole phase did very well. Like this was a killer year for probably anyone watching this channel, including myself, obviously. This was absolutely amazing, absolutely phenomenal. Once in a lifetime, potentially year, or at least a decade, or at least a century, which theoretically, I guess a century would probably be once in a lifetime. But also, people that lost their jobs or stopped working their jobs or have a bunch of kids or got unemployment plus pandemic assistance plus all these like aid programs did very well too, because they actually made more money than they would have made working their regular jobs. So those people, in relation to a normal year for them, did very well, because they probably made an extra 30% or 50% more than they would have made like the year before just going to work, and then they didn't have to go to work. So smart ones maybe started a business, or most of them probably just sat on their couch watching the news. But in all reality, the people that really got screwed through this whole thing are the people that were right in the middle. The people that don't own any assets, like that rent their house, don't have any stocks, don't have any investments, don't have anything that's gone up, that's appreciated in value, and then also kept working their jobs, because they probably got just stimulus checks, got no unemployment, no pandemic unemployment assistance, maybe got some like not even rental assistance. They basically just get like their rent pushed back, which they eventually are going to have to pay anyway. Student loans pushed back, which eventually they're going to have to pay anyway. So in all reality, those people who still worked through the whole pandemic and then got almost no benefits for it, those are the ones who really got screwed. The ones who basically the quote unquote essential workers. So this was a very strange situation, because a lot of people did very well, but a lot of people got totally screwed. But in the end, the people on the bottom did well in relation to a normal year, but still worse than everyone else because they're the poorest people. The people in the middle got completely screwed, and then the people on top obviously crushed it, all the way up to like, Jeff Bezos, who like decimated the world. Same with Elon Musk. All right, but that's enough of that. Interacting with chat. I'm gonna jump back into actual technical analysis, and we're gonna start with the indexes, traditional stocks. And we're about an hour and 44 minutes in, so we're making pretty good time. S&P obviously made all-time highs last week. There's not a whole lot to even look at on most of these things. I mean, we've broken out of our long uptrend. At this point in time, potentially looking to essentially just hit like some of these Fibonacci extension targets. I mean, the truth is, like, these things have broken out of long trending like resistance areas. So if we can continue long enough up here, I would expect like exponential moves to the upside. But again, we have to be very careful that we're not topping out. But again, you know the top's only going to happen once. So until we see actual indications that it's going to happen, I don't see any reason to get overly bearish on SPY. Dow Jones, same thing, broke out of basically an 80-year trend to the upside. Um, no reason to think it's not going to continue. We do have to be very careful as we're starting to see bearish divergence developing. We have bearish divergence between these 3 points, and then obviously, between 1, 2, 3 points. So we do have to be very careful. But if we do sell off, we're just going to sell off back to one of these like key supports. And I'm not even convinced that this would be like bearish overall. I think these things are just going to keep floating up for now. But we do have to be careful because we're seeing like the 10-year starting to creep up, and then also like the dollar strengthening. So IXIC, NASDAQ Composite Index, we're at, this one is not making all-time highs, but made all-time highs before everything else did, and had obviously a massive run. So, this thing could easily see like some selling take place here. But as far as I'm concerned now, we're entering back into a micro uptrend of the little sell-off downtrend. We expected to get up to 786, find resistance. We gapped up since then. Next target would be the 886 at 13,958. And then after that, it's just retesting the highs and then new all-time highs. So Russell 2000 RUT, it's just like 2,000 small cap stocks index, publicly traded. We had the high, sold off here, put in a new low. It's much weaker than anything else is right now. But, that corresponds like fundamentally with everything taking place. Like small cap or small businesses or whatever, tech has obviously been the strongest. And then you see like, the Dow is looking strong. The S&P is looking strong. The Russell is still overall strong, but it's the weakest of all the indexes. So, got slightly above the 618, got rejected back down to the 0.5. Again, to the upside, I would expect the target of the 786 at least 2,302, if not up to the 886 at 23,032. But again, if everything keeps creeping up here, no reason to think this isn't just going to go and put in a new all-time high. Vanguard, this is the VGX. This is basically just a FTSE index on, the American Stock Exchange. So it's basically just the European stock market. We talked about this one for the first time in a while last time. We took out key resistance points that we had not taken out in basically like, decades. We have not seen prices at this level since 2008. So we're at new all-time we're at 13-year highs on the FTSE. So we'll see what happens. We're consolidating now above a key resistance. I would expect this to move up at least to that diagonal trend line at 67.15, but potentially up to our next key Fibonacci level, which, potentially could take us up to, we're above the 786 now, take us up to the 886, 71.90. But again, with the way that the DXY looks right now, strengthening, and the fact that this is not even at all-time highs and has not been at all-time highs for like whatever it is, 20 years, got to be careful with this bad boy. I don't want to get overly bullish on something that's not putting in all-time highs after this massive liquidity event, and everything strong is putting in all-time highs right now. Anything that is not putting in all-time highs right now is technically weak, including silver. So this is the XLE energy sector. This head and shoulders, what I was saying is, we didn't want to see it come back down here to our support neckline right here. But the longer it consolidates in this range, the less like a head and shoulders is going to look, because it's not going to look as symmetrical as we like to see. But at this point in time, it looks very likely like it's going to get a break and potentially move back down to $40. So got to be careful for this thing. It is like nearing the bottom of the range, essentially putting in like a bullish reset. So we could easily, like after finding support here 1, 2, 3 times, find support again and get continuation. But the less bounce that we see off of this level every time we get there, it's going to just look like a descending, basically like pattern that we're in. And likelihood is that we spend enough time hitting this support, we're eventually just going to fall off the edge of the table. So could be very close to that waterfall. ICLN, this is basically just like clean energy ETF. This thing is very bearish right now, clearly in a descending trend line since it topped out here at 35 bucks, 34 something. Sold off since then like 33%. And I would expect this to continue selling off until it doesn't. If we can't get above, basically like this descending trend line here, I can't get bullish on this thing. And more than likely what's going to happen is we put in a low here, put in a lower low. It looks like we're just going to get rejected again, come back down here and put in either even lower low. So I'm looking for an entry back at like 20 bucks, 1979, or potentially the 0.5 at 1666. Very bullish on this fundamentally long term. Technically, looks like trash. All right, so next, let's go ahead and do commodities next. We already did gold and silver. Go ahead and rewind if you missed those. But we're going to look at UEC, Uranium Energy Corp. I'm obviously very bullish on uranium and its future. Not only technically, the chart looks great, but also fundamentally, nuclear power has come a long way since we've had some of these like key events that made people like hate nuclear energy. It also is a key producer of clean energy and is one of the few things that we do that has a zero carbon footprint. Obviously not the actual building or the mining of uranium, but nuclear power plants themselves, zero carbon footprint. I think uranium is going to skyrocket, and we're probably in like the beginning of what's going to be like a decade-long uptrend. UEC, still very bullish on this thing. We took out the all-time high. We could very easily get up here to like that I think I said 80 mark, and then sell back off and see a pullback. A lot of these things have come fast and hard to the upside, but uranium price is not necessarily like corresponding. So at some point in time, I could see like a decent pullback on these, but I will look at that as a buying opportunity. Extremely bullish on these over time. Uranium mining ETF, once again, it's like a levered position on uranium itself. We have a high here, we have another high, and then we have the same high. We have a high here, we have a lower high, we have a lower high. This thing is showing some serious bearish divergence on the daily. Again, it is putting in an ascending triangle, looking like a overall bullish pattern that we could get a potential move to the upside, but it's also showing quite a bit of bearish divergence. So we do have to be very careful. Looks a lot like Bitcoin. But if it does sell off, I expect to come back down to the 382. We already basically hit the 236 and then came up slightly higher. But I would expect to come back down here to like 45 bucks. But again, I'll be looking at these sell-offs in this as a buying opportunity, as I am macro bullish on commodities, particularly uranium and silver. First Majestic Mining Corp, bearish, looks bearish still. We put in that massive high, lower high, and it looks like we're getting ready to put in a lower high. If we can consolidate long enough, come back up here and take out 20 bucks, I'll be able to get bullish on this thing to come back up here. But overall, we hit my target to the downside. We hit my potential 4 retracement, the 1, the 2, the 3, the 4 retracement, and then I would expect a massive move to the upside on this thing, basically a doubling from where we're at now up to like 36 bucks. So bullish, long run, potentially a massive move even higher than that. But to me, it looks like a 5-wave structure taking place right now, and it looks like we're in the middle of or completing the 4. USAS, American Gold and Silver Corp. Again, just a mining stock. Very bearish overall. Came down to my first target. Down at basically the 382 or 0.5, depending where you're fibbing from. But it still looks bearish. Until we can start showing some strength on this thing, it's just going to continue to put in lower highs. My main primary key entry point is going to be this 618, which also corresponds with this diagonal trend line. Basically from our bottom right here to our bottom right here, and then potentially to another bottom at the 618. If I can get this thing at a $1.80, $1.75, $1.60, somewhere in that range, I'm gonna be absolutely ecstatic and very bullish on it. But in all reality, we could have a massive wick come through there. So I'm not looking to get overly bullish on this thing until we start seeing some signs of life, especially if silver and gold start to capitulate and do what they look like they're getting ready to do on the weekly, or what gold has already done on the weekly and silver looks like it's about to do on the weekly. I mean, this thing could get absolutely crushed. So And these are like levered positions on actual underlying assets. Like so, you know, you expect mining stocks to react at 2, 3, 5x the move. Caterpillar, very bullish. One of the best charts overall. Not percentage-wise gains, but fundamentally, this thing looks phenomenal. Technically, this thing looks phenomenal. Entered into a bull trend back here at 129 bucks. Since then, it has almost doubled, and I would expect it to continue massively to the upside. We do have to be very careful, though. 1, 2, 3 stabs of bearish divergence at the top of a parabolic trend to the upside. So this thing could easily sell back off to one of these key levels. But I would look at 189, 175, or even $206 as a buying opportunity. Pot stocks, ACB, you know, doing exactly what we've been talking about, been expecting. One of the weakest stocks in the space, finding some support at a lower high at the 0.5 after the previous top at the neckline of our inverted head and shoulders. At our key buying area, you know, I would love to see it come down here to 685. I could easily see it coming back down here to 579, you know, or even as low as a 786 back at like 525. But, you know, with the targets I have to this thing to the upside of like $33, that's over a, like, it's like a 4x from where we're at right now. Or if we get down to $6, it's over a 5x. You know, I'm not trying to get greedy on this thing. These things have sold off massive amount and been in very clear bear markets. And while this one is still showing quite a bit of weakness, if we look at something like Tilray, which more accurately represents the space, you know, Tilray entered into a bearish downtrend on the weekly. I'm on the daily chart, but this is the weekly downtrend, started at like 85 bucks. So we're at 20 now. So just a move back up to where it broke down from into the bearish trend is over a 4x right now. You guys know my target on Tilray, back to the previous all-time high, back to our measure move, or the 5. You know, if we get the Fibonacci extension to the 2.618 or the 1.236 of the previous all-time high, or just the 2.618 is of the top to bottom right here of the potential 3 of our 5-wave structure. It's over $1,000. So, you know, this is life-changing trade. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. You know, drugs are bad. Marijuana will kill you. THC is bad. CBD is bad. Prescription drugs are the only way to go. I obviously do not believe those things. I'm just joking. That's my impression from South Park. But in all reality, I would love to see a buy down here slightly lower at like 12 or 13 bucks, even as low as 10. I don't want to see it do anything worse than that, but 200 exponential and simple are to the upside. We're above them both right now. We're in a retracement period, but I think very likely we're just having the 4 play out right now. And this is going to be the trade of a lifetime. I think very likely in 2 or 3 years, you'll be able to look back at this video and say, I am now a millionaire because of this trade. So at least that's what I'll be saying to you guys. Multi-millionaire. Lemonade. You know, we broke down from this key blue trend line, came back up to it, got rejected. It tried to show some strength, but it looks like it's just going to capitulate out of this pattern back down to our red support line here at the bottom, which actually should be green in my opinion, because support should be green or blue and resistance should be red or orange or purple. 53 bucks, still my target on Lemonade. I think it's going to get crushed. Could stop down here at the 786 at 60 bucks, but I mean, I'm still not sure fundamentally or technically. Technically, this thing looks terrible. Fundamentally, I'm still not sure that this is going to be a success, so we'll see. But I mean, it's new, so who knows? It could easily sell off 90% and then change the whole world. You know, that's what happens a lot of times when you're right, but you're early. So, on to tech. I'm going to take a little sip, and then we'll get back at it. Integrity. Oh, it's funny. Adam? Maybe lower? Middle-ish? I'm not sure what you mean by that, Commander Corner. Oh, hang on. Let me scroll back a little bit. I agree with you. Nail in the coffin for the middle class, basically. Maybe lower, middle-ish. Yeah, 100%, man. I mean, I consider, to me, like the middle class is basically like anybody that's not considered poor or not considered rich. So, you know, that whole like middle ground, like the USA, our middle class is like getting absolutely decimated. Meanwhile, you know, China over the last 10 years, their middle class has grown exponentially. And like the wealth accumulation in their middle class is by far higher than that of like any other country in the last, like, I want to say like 50 or 100 years. So literally while we are in an economic decline, social decline, you know, basically like crashing fast to the ground, like on fire, burning with no parachutes. China's doing the opposite. So, you know, everybody is still stuck on this whole mentality. It's like China just steals ideas and make things cheap and they're trash. And it's like, well, that was true 10 or 20 years ago. But now I don't agree with the way the Chinese government operates. But it's hard to argue that China as a country is not outperforming just about any other country. And like fundamentally speaking, I think probably India is right behind them. And then I mean at some point in time, possibly the Middle East as well. I mean it's obviously a lot more instability over there and everything, but I think probably India is going to be like the next China over time. I think probably like the next like 50-year trade, like the 50-year trade for China was 20 years ago. So, you know, we're already halfway into it, but doesn't mean we're not going to continue to go parabolic. But I think the next 50-year trade is going to be India. I think India is going to absolutely outperform probably anything else over the next like 50-year period. But it's going to obviously take a little time to get started and everything, but I think it's going to go parabolic. Like technically, you know, and I mean, they have a massive population. They're an extremely poor country, like overall, like the median levels. But you know, they're strong on education and everything. I think probably what's limiting right now is essentially the same problems China had in the past, where they have like this class caste system and like a poor government. You know, and I'm not trying to speak ill of China or India's government or anything like that, but you know, based on like freedom and fundamentals and equality, you know, I don't like the way that they do things. But you could argue that they're doing things better than we are. Yeah, I have not looked at Atom in a while, but yeah, I can definitely pull that up before we get rolling on tech. Trying to think what has a long chart on that. Is it on Bitstamp? I don't think it is. I'm just gonna pull it up on Kraken. I want to say there's more chart history than that, but I'm too lazy to actually look. So I won't speak about all-time highs on this because I'm not actually sure the previous chart history before it got listed on. Oh, I pulled it up on Coinbase actually. I'm not sure if it actually has previous history here, but just based on what's going on right now, cycle high wise, you know, obviously you would have got bullish on this thing back at like $2.80. So it's basically had like a 10x since then. Not quite, but you know, you could argue that it's bearish right here because we put in a high, a lower high, but we did take out this lower high right here. So essentially, more likely than not, we're coming back up to like 25 bucks. Not really like a massively tradable range considering where we're at right now. 821 across to the upside. All the moving averages are still angled to the upside. You know, you could argue this is just a bullish reset, like a sideways consolidation while the indicator oscillators just cool off, and that this was your buy signal, the hard buy back here at the cross on the Stokes. And then now here we have basically the histogram crossing above the slope line. Now the slope line is still angled like strong to the downside here, but it looks more than likely like it's just going to come back up and retest the highs. If it gets a close above $25, above the previous high right here, like cycle high, I might call it the all-time high, but again, I'm not sure if it is. But if it gets a close above that cycle high back here at $25.20, I would expect like just a parabolic move from there. I can't do a long-term fib extension because I'm not sure I have all the price history, but we can do one just from this little sell-off right here. If it takes out the all-time highs right there, just a Fibonacci extension target to the upside. The next target, the 1.236, would be $30. More realistically, though, I look at the 1.618, $37.35, or the 2.618 would be my actual like cycle high target potentially of like $65. So you're looking at basically a 2 to 3x still if crypto stays in an uptrend, or you know, Bitcoin goes sideways while these things make massive highs. But in all reality, you could argue right now that what's happening on this one is we have a very clear like one. Let's do a. You could argue that this is like Elliott wave 1, and then that was our 2 retracement, and that this is like potentially going to be our 3, and then we're going to get like a 4, and then like a massive move up here, like put in a 5 at like the 2.618 or something like that, you know, just roughly. And then just to get an idea, essentially we can take a Fibonacci extension of when the 1 sold off down to the bottom of the 2. So I'm charting Fibonacci from the 1 down to the 2 to look at where our Fibonacci extension comes in for the current wave that we're in right now, to see does it look like it's about to top out. So now that's the green fib targets that I have in place right here. And just going off of that, it basically, damn, let me move this over a little bit. Basically looks like we topped out at the like 2 probably 5. It's probably at the 2.5. I don't actually have it on here. Let me put it on real quick. Do I have a 2.5? I do not. I will add in the 2.5. Because that looks, just eyeballing it, that looks like where we're at right now. Oh no, it's still up there. So maybe this was like the 2.618 or something like that. But in all reality, what it looks like is, I mean, it either is potentially topping out now, but in all reality, I would expect it probably to come up slightly higher to that 2.618 rather, which in all reality would put us at $36, which is what I was saying is the 1.618 of this pullback. So I think this is just a micro pullback. I think we're going to get a move up to $36. And then once we get up to $36, and again, this is just guesstimating based on the Fibonacci extension of the top of the 1, bottom of the 2. But I would say more likely than not, we're coming up to $36. And then once it gets to $36, I would expect it to come back down roughly to the top of the 1, somewhere around there. Now, depending how bullish it is, it might not get down that low. But then if those two assumptions, which again, those are just guesstimation assumptions, if the 3 tops out exactly where I said, which it's not going to top out exactly where I said, but, you know, potential likelihood of that happening. But if that happens, then I would expect for the 5, that would be the top of the 3, bottom of the 4 comes in roughly around the top of the 1, and then we could do a Fibonacci extension, extrapolate that out for the wave 5, at which point in time, the wave 5, I would expect to come up somewhere between the 2.618 of that previous extension and the 1.618 overall. So again, I would be looking at somewhere from like $68 to $86. But, you know, those are long-term targets. They may not even happen in this cycle, or they might just happen like parabolically. But in all reality, the sell-off from the top of the 1 at $9 to the bottom of the 2 at $360 was basically, that was like mid-August to mid-September. So that was like a 1-month sell-off. We've already been in like a 1-month consolidation pattern. So I would expect this to come back up for a new high and then potentially sell back off for like a month or 2 right here. So I would say that if this is in all actuality going to be a 5-wave structure, it would take place inside of this year. So I would expect that roughly, and time technical analysis is the hardest kind to do, I would expect this 5 to come up here and top out sometime towards like November, December of 2021, the end of the year, the end of the cycle. So, you know, realistically, like time horizon wise, I think the way this chart is drawn right now, time horizon wise, is probably fairly accurate. So, but again, not financial advice. This thing could go to 0 tomorrow. But it looks good. Looks good overall. But again, I would have to look at coin market cap and actually like spend a little time looking at this thing and maybe even look at like some of the fundamentals. Like I know I've done TA on this before, but I cannot remember what the all-time high is. And I really don't remember what the hell this thing even is. So, all right. So let's get back into, we're going to start with Tesla and we'll run into our tech here in a sec. And just glancing over at Bitcoin, what's it look like is happening right now? It's that descending triangle playing out perfectly. We got a massive rejection when we pushed up to 60,200. Came back up again, tried to get above 60,000, got rejected again on the 4-hour, and we're right back down at like that bottom of the descending triangle. Looks like we're getting ready to capitulate out of the descending triangle. But again, don't want to get overly bearish on this thing. We're trying to put in a reset. What's our time at? 2 hours and 10 minutes. Oh, we'll be done in probably 20 minutes then. That's awesome. I've been trying to keep these closer to like between 2 and 2.5 hours, as 3 hours can get a little exhausting. And it usually has like plenty of rants in there as long as I do the TA fast. And most of the time when we look at these, we're looking at them 2 or 3 days apart, and we're looking at massive long time frames. So like not much changes. We're getting like 2 or 3 candles in between. So Tesla, nothing has changed for Tesla. We're consolidating above the 8 and 21, trying to push back up here to the upside. I still expect a move back up between $739 to $807. But when we do get that move back up, I'm looking at it as a selling opportunity, because I still think that this is just, I still think there's more further downside on Tesla. You know, realistically, we hit my target perfectly at 540, which is great. I think realistically, we're coming back down to like high 4s, low 5s. But I would not be surprised to see Tesla down at $250 before we make new all-time highs. But again, that could change. If we continue in this uptrend, if we continue showing some strength through here, we could very easily take out the all-time high. But I think this thing is massively overvalued still. And I love Tesla. And it's only overvalued for now. I definitely think eventually it will make new all-time highs. But I'm not convinced that it makes new all-time highs before it takes out its cycle low. NEO, very weak. Chinese stocks are still very weak. Again, I'm very bullish on this thing overall. Massive potential, but keep in mind this thing was at like $3 about to go bankrupt a year ago, and now it's at 38. So we're still up like, you know, 12x from then, even after selling off from $67. So while it looks like a 33% discount and a great buying opportunity, we are just consolidating above the 200 exponential and simple moving averages. And remember what I talk about with these key moving averages. When we get that bounce, we want to see a bounce and then never come back to it. Or if we see a second bounce come back to it, we then want to see a more powerful bounce away from it. We're seeing the opposite. We're dropping a bouncing ball from 10 feet up, and then it's bouncing back up 5 feet, 50% retracement, and then it's bouncing back up 4 feet, 38% retracement, and then it's about to hit the ground again. And when it bounces this next time, it's going to bounce even lower. And when it bounces lower, eventually it's just going to start rolling sideways. And when it rolls sideways for long enough, it eats through all of these buy orders at that key flat line support, that descending triangle support. This is basically a descending triangle that's forming. Flat bottom, you know, downward, descending resistance top. Eventually we just roll sideways long enough and we fall off the table. And when we fall off the table, we get the measured move of the descending triangle, which in this case is going to be like probably this as a minimum. So when this thing falls off the table, when it rolls off the edge, you know, it's going to roll off back down to like $26. So yeah, we're down 35%, 30%, whatever. It's a great buying opportunity unless it goes down another 30%. And then you look like an idiot. So way too early to get bullish on this thing. We did not even hit the 236 of $29. If we can touch $30 and then show strength, I can get bullish on this thing. But right now, it looks like we're about to roll the 200 exponential and simple to the downside. And this thing's going to re-enter at least the temporary daily bear market. I talked about this last time, Helion Holdings. You know, this is basically just an EV company that instead of creating new EV like semi trucks, is basically just converting existing semi trucks, drivetrains into gas powered, like as in like natural gas / EV engines. So this had a massive move up in June last year from like $10 where it's at now, and left a gap from $10 up to basically like, depending when you're going by, basically left a gap from $10 to $12. We have now come back down and filled that gap. So when I talk about these gaps don't have to get filled right away, look how long it took to fill this gap. Okay? Look how long that took, and look how high it went. It went from $10 to $60. It's 6x, went parabolic, and people said it'll never go back to $10, and then it capitulated down slowly but surely, and now here, look what happened. It filled the gap. So this is why I talk about gaps, and breakaway gaps might seem like that breakaway gap at $18,000 might never seem like it's going to get filled on Bitcoin until it gets filled at $18,000, and then I'll sit back and say, told you so. And if it never gets filled, that's completely fine. My point is that it is never out of the realm of possibility, and there's a reason why gaps get filled over 80% of the time. Statistically, likelihood is that we will fill that gap. Now, this thing could easily still sell off and continue back down here, but the truth is, I'm looking for this thing to start showing some strength. When we see an 821 potential cross back to the upside, or the 100% retracement back to the 1, or some kind of like legitimate news come out on this, I'm looking at this thing as basically a long shot for at least some kind of Fibonacci extension. Even if we bounce the 100% retracement, or even the area we're at right now, if we bounce this and put in a 50% retracement and then get rejected and keep going down lower, that's basically buying at $10 and selling at $23 in a bearish downtrend. Again, I don't like to pick the bottoms on things. I don't like to buy weak things, but fundamentally, I think this is actually a good idea. What's going to happen to, okay, say that we get all these new like EV semis, and Tesla puts one out, and maybe Nikola puts one out, and maybe GM puts one out and stuff. What's going to happen to all the old semis? There's going to be a bunch of old semis that are mechanically built that now will be just sitting around because nobody wants to use them because all the EV semis are better. So what do you do with them? Somebody repurposes them. Who's going to repurpose them? Maybe Helion. So in my opinion, and that makes a semi truck value go to like nothing because nobody wants them because all the EV semis are better, and the government gives you like all these bonuses and all these incentives to have EV semis, buy the new stuff because they want to switch over for the lower carbon footprint and whatnot. Well, meanwhile, these people buy them up because they're worth nothing now, put these electric engines in them, put the natural gas engines in them, and then their stock shoots up 50% because it's overvalued, or maybe to a new all-time high. Whatever. But anyway, fundamentally, this thing has some potential. Technically looks like total crap. Alibaba, back to the China. Alibaba, man, I love this thing. Like, fundamentally, it's great. Fundamentally, Alibaba is not going anywhere, in my opinion. Alibaba is a massive uptrend. But if we look at the actual chart here, I mean, this thing is looking rough. Technically, it looks like crap. Technically. But the way I look at this, looking at a massive chart for Alibaba, is I look at the bottom down here at $60, and then the top here at $210. That's our 1 in blue. Then our 2 sell off back down to $130, and then our 3 push up here potentially back to $319. Now what I pay attention to is from the 1, that is $152 increase. Okay, so now I want to see the 2 from the bottom of the 2 to the top of the 3 be roughly that same amount or more, because typically the 3 will be longer than the 1. So I want to see this be at least $157. So if we look at that from the 1 to the 3, it's $189. So that already validates the potential for this being a 5-wave Elliott wave structure, where the 1 comes down to the 2, and then the 3 is longer than the 1, because it's often longer than the 1, but it doesn't have to be, but it also can't be the shortest. So now there's no way it'll be the shortest because it's already longer than the 1. So the likelihood now of this thing selling back down to the top of the 1, which is basically where it's at now, we bottomed out at the 1 right here, bottomed out at the 1 right here. So now inside of that 3 that's taking place, we put in essentially a 1, a 2, a 3, a 4, but the 4 sold off a little more than I like to see on the daily. But if we actually switch over real quick and look at this thing on the weekly, you can see, the weekly bottom, again, it's still a little bit more of a retrace I like to see, but it is possibly not invalidated, but essentially that 3 came down, 4 retested, and then we put in the 5. So once again, looks good. And then if we look at that trend line that we had here in green going up, what is taking place right now? We are basically bouncing that support line, bouncing it, and now we're just slightly underneath it. So if this sells off right here, we could easily hit our target back down here to $206. But I don't really want to see it start like selling off too heavily because we're basically at that 1 right now. So I would really like to see this thing like put in that low and then this be a higher low, or potentially sell back down, take out this low, but still put in a higher low than this, or even a double bottom. I really just want to see this thing start to find strength. Even if it just goes sideways and then eventually starts moving back up, I would be extremely bullish. And the 5 on the macro for this thing and the potential trade entry from $200 up to a move of $436, or potentially up to the 2.618 of $622. Again, technically looks terrible right now. Fundamentally looks phenomenal, but it's a very clean chart. Very clean chart, very technical overall, with the exception of like that slight little invalidation right here. But essentially looks like we may be potentially at a key buying opportunity. Zoom looks like trash. Selling off bearishly. It looks a lot like gold. It tried to break out and then got that capitulation event. It looks like it's below the 200 exponential, below the 200 simple. It looks like it's getting ready to sell back off down to the channel here. And this is one of the ones, once again, when I say it looks like gold, I mean it. If we look at not only the descending channel that were taking place, also the cross of the 821 on the weekly, the attempt to push back up, the rejection, and then the 821 follow through back down to the 50-55, and then next potential target on the weekly to the downside of the 89. It looks like Zoom is going to sell off another $90 to $237, 80 or $90. It looks like it's going to get crushed, in my opinion. But I'm looking at somewhere between $280 and $236 as a buying opportunity, because I think fundamentally Zoom is not going to go away. Maybe a new competitor comes in and dethrones it and steals its market cap, and that's why it sells off like massively, and I'm wrong. But in all reality, I don't think Zoom's going anywhere. I don't think the reopening trade is going to be as successful as people think. I don't think people are going to go back to working the same amount of hours and the same percentage of people in office buildings in crowded cities. I don't think people are going to be taking business trips all over the world to shake somebody's hand for a day and play golf. I think in all reality, people are just going to do what's easier and what's simpler and has proven effective. They're just going to meet up on Zoom calls. So again, fundamentally, very bullish. Technically, bearish. Potentially at key areas to take buys. The PayPal trade's going phenomenally, doing exactly what we said. Put in a higher low bottom, bounced up here. We're still expecting our move up to the 618 of $273. If we can take out like this $275 range, I expect the 786 to get hit at $288. If we go higher than that, more than likely, we're just going to be taking out the all-time high and continuing to the upside. But again, still down over 10% from the all-time high. And if you look at from that $310 range to the $223 range, this thing lost like 30% of its value. Front ran the 200 exponential and simple moving averages. But again, what's going to happen to PayPal if crypto starts capitulating? This thing could get absolutely crushed and just put in a lower high and then a lower low and continue to the downside. So while PayPal overall I'm bullish on, as it's essentially like stealing market cap from the banks and then also diversifying from like the traditional like way of doing business and settlements to like crypto and whatnot. Overall, got to be careful with this one, but it does look bullish inside of macro bullish, micro bearish, and then super micro bullish. But we got to see it take out some of these key Fibonacci levels. Otherwise, it's just going to look like a rejection and then continuation to the downside. And then also what I'm paying attention to also is, are we going to keep putting strength in on the indicator oscillator, take out this point right here, and then actually be putting in bearish divergence? Because if we start putting in bearish divergence and get a lower high right here, I'm definitely going to be confident this is going to continue selling off. Right now, it's like bullish to neutral, but we were bullish back here. We were bullish back here. I wouldn't want to get bullish right here. Apple still in this trade, obviously absolutely crushing it. It did exactly what we said, broke out of our descending channel. We're the majority of the way to our measured move right here. We're basically at the top of the measured move of the channel. If you just take this measured move there, or of that's our pattern measure move right here. But also we have our trade setup in place right here, which is based on essentially the Fibonacci extension of the 618, which is where we're potentially topping, or as high as the 786. If we take out this point and make it up to the 786, we might see some temporary like cool down, but I would expect it to just get back up to all-time highs again. But again, great buying opportunity on Apple. It didn't sell off nearly as much as some of this other stuff, but this is a real company with real profits that's been around. This is not some completely overvalued company that's like a hope, a wish, and a dream that will be one day profitable but isn't now, or will one day be successful but isn't now. You know, it topped out at 144 bucks. It was a massive buying opportunity anywhere in this range off of like the 382 at 120 bucks. I obviously took that buying opportunity, you know, but you know, this thing doesn't move parabolic like all these like fake like FOMO like overvalued stocks do. I mean, this is a 13% move to the upside. You're not going to get rich off of Apple, but it is, in my opinion, more of like one of those like solid stocks in your portfolio. So, not financial advice. I'm not your financial advisor. Please do your own research, trade responsibly. You'll lose all your money if you listen to anything I say in these videos. Pinterest. I mean, I don't have to tell you, it's the same thing. We got bullish back here. You know, taking out the 0.5, taking out this point at 75 bucks. You know, the trade is up now. You know, 15% of our 20% trade target to the upside. You know, this is a great trade. Risk reward was good, fundamentally good, technically good. We're at the 886 at this point in time. Once we hit the 886 on a bearish retracement or bullish retracement inside of a bearish move in an overall bullish uptrend, you know, I would expect this thing to make new all-time highs. And to tell you the truth, where we're at right now and where we topped out at 90 bucks, I think this thing will be at $100 extremely fast. Because typically, when something gets close to $10, it will go to $10. When it gets close to $100, it will go to $100. The 1.236 is $99. So I think it's very likely going to 100, and then in all reality, 115. So Pinterest, fundamentally bullish, technically bullish, one of the better stocks in this sector, and obviously stronger fundamentals as well. VanEck, semiconductors. I was talking about these semiconductors and how important they are and how they're a signal overall health of the market and what we're expecting to happen. This ETF on semiconductors is back up here, retesting the all-time high. It could very easily top back out here, but again, this is another trade that's absolutely killing it. Next target to the upside for our second take profit is the 1.236. We're already basically back at the all-time high. 1.236 is going to put us up here at $270. Again, you're not going to get rich off this. It's at 256, you know, but if you took the entry back here at like 243 or 240, you know, it's a nice profitable trade. But again, it's not going to make you rich, but it's much more stable. Even when it's sold off, you know, and fundamentally, it's extremely strong, technically and fundamentally. I mean, you know, semiconductors are in a massive shortage right now. So I would only expect this thing to go parabolic before it ever has like a parabolic descent. So it looks great. You know, if you're already in it, if you're not, maybe when it takes out the all-time high, but I'm just not sure the risk reward is there. I don't like buying breakouts. The only people that buy breakouts are FOMOers and stop losses for people that put in shorts. And the difference is FOMOers buy something once it's already breaking out because they're feeling that FOMO, and stop losses buy something when it breaks out because they're admitting they were wrong about prices going lower. So I would rather be the guy who admits they're wrong about prices going lower than trying to chase something. Walmart, I mean, it's doing exactly what we've been saying. At the bottom right here, you know, I told you guys I was looking for an entry at Walmart at the absolute bottom at 127. Now, if you're not in that trade already, I'm looking for either a short on a failed breakout gap fill at 144, or I'm looking for a long at a breakout consolidation and continuation on a retest at like 138. So you could argue, should I just buy right now at 139? You can do whatever you want, but I'm not buying into resistance. I will buy support. I will sell resistance, but I'm not selling resistance right now when the likelihood is that we're going to just gap up at some point in time to 144 and then sell straight back off after we close that gap. So, but again, Walmart, fundamentally extremely bullish, technically not bad. We did sell off violently below the 200 exponential and simple, but we've now reclaimed them. So as long as we're above them and they're slope to the upside on the daily, I would not expect Walmart to go down. I would just expect it to go back up. And especially as like more and more small businesses close down and, you know, Walmart just it's decimating the space. You know, you got like Target and Walmart basically are killing it. ARK funds they're basically just going sideways now, but you guys know my targets on the ARK funds are all up to the 0.5 levels. If we take out the 0.5 levels and invalidate the previous highs on the way down, I'm expecting at least 618 to 786 retracements and then potentially continuation to the downside. This one is ARK K. ARK F is very similar too. They all look the same because they're all the same people. They're all the majority of the same stocks inside of them. You know, they're not really that diverse. But 786 to 618 target on ARK F is like $60 roughly. ARK G same thing. This one's weaker, but a 618 target to a 786 target, invalidating that previous little like swing right here, potentially up to like 99 to 105 bucks. ARKW, you know, a little stronger, but still weak. I want to see it take out at least that high at 162. I would expect it to potentially top out between 165 and 176. But our measured move of the breakdown could potentially take us up as high as maybe like 185, something like that. ARKQ, technology and robotics, you know, showing some weakness. Overall, same exact thing. I want to see it take out this high here at $88.29, at which point in time it'll look like a double bottom, which the you know, basically measure move would put us up at like 98 bucks. But in all reality, I'd be careful of weakness between the 618 and 786, between $90 and $95. And then that's going to do it. Bam, knocked him out. Crushed it. Came in at roughly 2 hours and 30 minutes. Got some macro in there. Took a look at quite a bit of stuff on the weekly, which people are, you know, these are the most four important charts right now. The 10-year treasury, the DXY, gold chart, and the silver chart. And then you could argue obviously like Bitcoin as well, because it's going to tell you what's going on in crypto. Also, total market cap on crypto looks good. Bitcoin dominance on crypto looks like Bitcoin is losing the 200 exponential and simple moving averages and going to continue into a macro downtrend. But we have to be careful because we could very easily turn that trend back around and it's just a fake out. So paying close attention. We'll see what happens. China is smashing down on Ali right now. Yeah, I mean, there's a bunch of stuff going on with China and, you know, basically like, you know, controlling some of these companies, not only like financially by having stakes in the companies, but also like regulations and basically just telling them what to do. Being hit with monopoly charges. Yeah, it's big time stuff going on here. And I mean, you know, there's definitely potential that what's happening now in China with a lot of the trends we're seeing in China are going to then take place in the United States. Like what's happening with monopoly charges over there, you know, with a bunch of these different companies, including Alibaba, could very likely happen here in the United States with, you know, stuff like a lot of these like tech giants. Like for instance, Amazon might be getting hit with those same charges here in the United States eventually. There's very high likelihood, in my opinion, that they will get, you know, not shut down, but broken up or essentially classified as a monopoly, and things will change. At which point in time, I would expect fundamentally and technically the charts to just get absolutely crushed. And it's the same thing with like stuff like Facebook. You know, these big tech people have gotten out of control. I mean, if big tech gets in trouble for essentially like censoring people, which the dumbest thing they ever did was to censor Trump. To censor a existing president, no matter what you think about what he's saying or whatever, the argument against that is that you're saying Trump incited a riot and hate speech and stuff like that. Regardless what you believe and what you think, whether or not you think that's true, they have allowed, Twitter and Facebook have allowed other dictators or other leaders in other countries to say like literally racial, genocidal things against different people. Like I mean, it's absolutely crazy. Some of these other leaders have legitimately made like genocidal, racial comments about killing people based on their race, committing genocide based on their race against like Arabs, against Jews, against all different people of different ethnicities, against Muslims. So regardless of what you think, for Twitter and them to say, you know, it's okay to censor Trump because he's American president, but we're not going to censor like these dictators or these like crazy ass leaders of other countries, you're just putting a shoe in your own mouth. You should either censor all of them or none of them. And in my opinion, they should censor none of them because then they don't have to worry about the government coming back and saying that they're actually like essentially like a media outlet and they're vetting like stuff. I mean, there's going to be some serious repercussions in the future from like all this big tech censorship. And in my opinion, you know, it's one or the other. You're either the town square where everybody can come talk and voice their opinions, or you're not. But if you're not, you're just news agency, and in which case you need to be classified differently, and then you're going to be held accountably, basically because you're determining like what information gets spread. So they got to be very careful with this stuff because they're literally like tiptoeing on ice, and the ice is cracking below them. And, you know, it's that whole cancel culture thing. Like, you know, first they come for this group, and then they come for that group, and then they come for that group, and then finally they came for me, you know, but there was nobody left to stand up for me. You know, that's exactly what's happening right now. Because at first it was like all these like extremist groups are coming after this, coming after that, coming after that, and everybody's just sitting back. And now they're starting to eat themselves. And we're definitely in a slippery slope right now with all this like censorship. And in my opinion, terrible, terrible idea. Let people talk, and then give people legitimate information, and then let their brains decide whether or not it's legitimate or not. Don't try to only let people see what you believe in, because eventually people are going to realize you're doing that, and then they're no longer going to trust you. And once you've lost trust, it's impossible to get it back. I mean, it's like a relationship thing. When you trust someone and then the first time they cheat on you, the likelihood of that relationship ever lasting, you ever trusting them again, is very unlikely. And it's the same way with knowledge. Like when you lie to somebody and they find out you're lying to them, the likelihood of you ever trusting them again is extremely unlikely. And it's always going to be like that little like bit in the back of their head where it's like, I don't know, they could be lying. They did it before. So you're always going to be kind of skeptical. So in my opinion, very bad idea. But I think we're going to wrap it up there. I appreciate everybody who came by today. Definitely appreciate all the likes and everything. I know it's not showing up, but again, YouTube's been having issues with like view count and also like likes and viewers and everything showing up accurately. They sent out a message saying it. So don't just think like people are being unsupportive because it says there's 2 likes right now. I know there's way more than that. So I appreciate everybody. Just a reminder, this is about to be an amazing week. There's going to be tons of volatility. We'll look at the VIX here and see what's going on, but I expect massive moves. Earnings, quarterly, you know, lots of divergence, potentially bearish, lots of potentially bullish patterns to the upside. I mean, I'm expecting some massive moves and tons of opportunities for profitability. I mean, what happens now with silver and gold potentially going into a downtrend could be some violent moves to the downside and amazing buying opportunities. What's potentially going to happen in the stock market with this bearish divergence playing out and potentially topping out, or crypto potentially topping out, there's going to be massive buying opportunities in stuff that has not had pullbacks for a while, or shorting opportunities. And the same like with the 10-year and the US dollar right now are showing us like massive signs, you know, that they're going to strengthen and giving us some awesome potential opportunities, you know, to basically like showing us that essentially like cash is about to be king again, at least temporarily. And there's going to be some massive buying opportunities in the near future as some of these overvalued assets start to capitulate, or at least retrace, you know, to levels where they're looking appetizing again. Because right now, there's very, very few places to put your money that look good right now. Just about everything is extremely overvalued. And to tell you the truth, gold and silver and, you know, maybe copper has already gone way too far, in my opinion, short term, to be appetizing. So gold, silver, platinum, I mean, some of that yellow cake, that uranium, things like that look good right now. But the actual charts look terrible. Like the technicals on gold and silver don't look good. So we'll have to see what happens. And to tell you the truth, you know, silver was at like 25.20 or opened up at 25.30 on the London markets or whatever. And wait, I don't think the London market. Well, it was at like 25.20, and then I think it was actually being priced at 25.30 or 25.35, and it's already back down at $25, probably about to break lower. So again, we're seeing a lot of weakness in this stuff, and silver is at that key level where if it doesn't just close higher at like 25.50 or whatever, it's going to get that cross, and these algos are going to step in and smash down the price. And all these idiots that have been paying these ridiculous premiums are just going to get absolutely killed, you know, because you're going to end up back eventually at normal premiums, and you better hope that when the premiums go back to normal, the price is way higher, or you're going to be upside down, you know, 25, 30, 50% on some of these trades. Like if silver, people are buying silver at $36 and $40. If it goes back down to $20 and the premiums go back down to like $3, you're going to have lost 50% of your buying power, 50% of your value. So that's my argument against paying ridiculous premiums and believing that there is a silver shortage, believing that there's no more silver. This is, it's the same as believing in inflation right now. Everybody is so sure there's all this inflation because their steaks are more expensive. Um, we can't get toilet paper. There's inflation. There's inflation everywhere. There is deflation taking place all over the world right now. And it's a fact because you can look at GDP. GDP, even if GDP climbs massively this year, it will still be lower than it was in previous years. And even if it's not lower than it was in previous years, even if GDP net goes up this year, it's still going to be lower because GDP is supposed to go up by 6% per year. And even if we go up, we're going to be like 1% higher or 2% higher. We're not going to be 6%. So we'll be net higher, but we're going to be lower than where we should be. So regardless of what you think about it, the pandemic is causing a deflationary environment. Even if it's deflationary, but not by that much, all this money printing, all this extra liquidity, all this pumping into the system all over the world by all these central banks, by the Fed, by everybody, all it's doing is filling holes. We're filling holes in a sinking ship. And all we're doing is stopping the ship from sinking, but we're still taking on water. Okay, so until we actually fix the holes, bilge all the water back out of the boat, and start floating up higher, we're still in a macro deflationary environment inside of a really macro deflationary environment because technology is macro deflationary. And regardless of what you think, we've been experiencing actual macro deflation for over like 40 years since the last time we had inflation back in like the 70s and 80s when it reached like 20%. So, you know, you want inflation, it's going to be like 20% again. It's going to get out of control. So don't think you want inflation. The only people who want inflation are those with massive amounts of debt because they can't actually pay off their debt if there's not inflation because the debt is unserviceable if interest rates rise. So it's in the best interest of everyone that inflation continues at a small rate or deflates like a little bit. But if we see interest rates start to skyrocket, the debt around the world is going to be unserviceable and the whole system is going to crash down. Because at like 4%, 5%, 2%, 1%, we're barely even able to service our debts, like as countries, as like, you know, economies and governments are concerned. We're barely able to pay the interest on our debt. All these countries are like zombie countries right now, the same way that all these businesses are zombie businesses right now. They're literally only able to pay the interest on their loans. Just like the same way consumers are zombie consumers right now. They're literally just making minimum payments on their credit cards to get by. Minimum payments on their houses. A lot of them not even making mortgage payments right now, student loan payments right now, credit card payments right now, because they're all like in like deferrals right now. That's not going to last. So we can argue that all this stuff looks good and we're going to get inflation or whatever, but it's not actual real inflation like wage inflation. Wage inflation causes real inflation because the movement of money continues to grow. The velocity of money continues to grow, but there's more money because people are making more money at their jobs. That's good inflation, like in the sense that things are going up because of what everybody's afraid of inflation. But that's called wage inflation. We're not getting that. We're getting supply constraint right now. We have less people manufacturing less things, and then we're trying to pump money into the system to stop the boat from sinking, and then people are using that money to buy those less things. If right now we were still manufacturing all these real things, and then we were pumping all this money into the system, then we would have actual real inflation taking place. But the fact is we have basically bottlenecks in the supply chain leading to all this stuff that's leading to the microinflation. But the second that stops happening, second all these bottlenecks go away and everything opens back up, we'll see very clearly that there is not actually inflation taking place. We're actually in a stagflation or deflationary environment. And if something fundamentally underlying does not change to make this system work again, it's going to crash. We're going to enter back into a deflationary environment, or we're going to see hyperinflation of assets and stuff like that while we're inside that deflationary environment. So people are praying for the system to break because of this, that, and the other, because they want their stuff to go up in value. But I promise you right now, no one wants the system to break. We do not want the system to break, because if the system breaks, you could be as rich as you want, but you're not going to be able to buy any of the things you want. You're not going to be able to go to a supermarket and get food. You're not going to be able to buy cool guns or ammo. You're not going to be able to go to movie theaters or, you know, take taxis or go to your job or whatever. The world is going to suck if the system breaks. It's going to suck. So don't pray for it to break. Hedge yourself in case it breaks. Don't bet on the apocalypse system. Cover yourself in case the apocalypse happens and the system breaks. That's how I look at it. And that's why it's called a hedge, not, speculating 100% into Bitcoin because you think the monetary system is going to break, or gold or silver because you think the financial system is going to break completely. Nobody wants that. Trust me, we don't want that. It's going to be extreme poverty throughout the world and a complete breakdown of, the world and society as we know it. And if you like society and you enjoy fun things and cool cars and video games and nice stuff and wealth and food and all that, trust me, you don't want the system to break. So, but there you have it. That's my rant to end the video. Crypto trend trader. Remember, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please appreciate all the positivity. Appreciate all the cool comments. Everybody, mad love from the community. Make sure you share this with your friends, your family, anybody that cares, that wants to learn about technicals, whatever. Continuing to try and grow the channel. Obviously growing at a slower pace, but I suspect that once a couple more of these trends start to develop, and I'm right, if gold and silver start to capitulate here, if the dollar and the 10 years start to pump here, if crypto potentially starts like topping out, that's when usually I see my booms in subscribers and growth and everything, because everybody realized, holy shit, this contrarian dude was right about everything. Because I mean, when I massively grew last time was not when I put out all my videos talking about the stock market capitulating, not when I talked about everything dying and a 50% pullback. It was afterwards when it happened, and then everybody was like, oh shit, this dude was right. How did he know it? Let me go back now. Let me start watching his videos now. Let me listen to him now. So my stuff's always lagging, so don't worry about like that for now. I'm not worried about it. In time, things will change, will grow, will be massive. I'll have my, courses out soon, have all this extra content, all this extra good stuff, and, we'll continue to grow as a community. But I appreciate all the positivity, appreciate all the love, the good feedback, comments, all that good stuff. And best know also that I'm out here protecting you guys from all these stupid spam bots and everything. But if you see ridiculous comments, if you see that stuff in the comments, whatever, you guys are all smart enough to know it's scammers. If it's not me specifically telling you something, if I'm not, if I don't have like that little highlight in the comments, if I'm not talking to you specifically, don't believe in Mr. Russ's system or so-and-so's signals or whatever it is. It's all trash. So, well, there you have it, guys. Crypto Trend Trader, and I'm out of here.